Panama. இல்லம்மா பேசுறது அனுப்பல சொல்லு.
So here we can say, here we can
Share. Is it share it?
5 minutes to start. Visible participants.
Sorry,
5 minutes.
sorry. Yes, sorry. Disable share.
5 minutes. Yes.
சொல்லுமா disable. இதுலயே போடலாமா, இதுலயே பேசிக்குமா, இதுலயே put it down, put it. பண்ணல. Okay, சொல்லுங்க. Disable. Still post disabled for participant.
Ma'am. Yeah. We have not received any request like the first time.
காட்டுமா, வாட்ஸ்அப்ல காட்டு. வாட்ஸ்அப்ல காட்டு.
నేను అక్కడికి వెళ్ళాలంటే ఆడికి అన్ని కవర్ చేయడం అవదు.
అవునులే, నిజమే, కరెక్టే.
వాళ్ళకి అంటే ఇక్కడ ఊర్లో వాళ్ళకి నాకున్నంత
ఫెమిలియారిటీ ఆడికి ఉండదు. అవును, కరెక్టే, అది కరెక్టే. అవును,
మనకి ఇక్కడ ఏంటంటే అయిపోతే ఆడికి ఒక ఫ్యామిలీ మరి అంతా కొడుకు కోళ్ళు కూడా వెళ్తున్నారు కదా.
అవునులే, నీ వైపు నుంచి ప్రాబ్లం లేదన్నయ్య. అందరూ అంటే సాయి వాళ్ళు వెళ్తున్నారు కాబట్టి ప్రాబ్లం ఉండకూడదు. ఇంకా అది
నాకు తెలిసి శరణు కోళ్ళు కూడా వెళ్తారేమో, కారు వెళ్తారేమో బహుశా. ఇంకా చెప్పలేదాడు. ఎవరన్నా అడిగితే ఇంకేం డిసైడ్ చేయలేదని అన్నాడు.
Hello. Okay. Okay. Can we start, sir? Yeah. Okay. Okay, sir. Very good evening, sir. Am I audible, sir? I cannot hear you, sir. You're muted.
Now, can you hear me?
Yeah. Yeah. Now is okay, sir.
Okay, okay,
Now
please.
okay. Okay. We can start now.
Yeah,
Okay, sir. Thank you.
you can make the profile brief to save the time. My humble request to you all, if you don't mind.
Okay, sir. Okay. We'll try. We'll try. It's 4
Just to
pages,
save
sir.
the time.
Yeah. Okay, sir. We'll try.
Yeah.
Okay. Very good evening, all of you.
Good evening.
So today we gathered here in the Zoom meeting to discuss about the recent changes in the taxation of charitable and trust, taxation of charitable and trust, charitable trust and NPOs. So today I am very happy to be with you, sir, Mr. Kanta Swamiji. He is an eminent person in trusts and FCRA matters. So we are glad with you. We are glad to have you, sir. Thank you,
Thank
sir.
you. Thank you so
you.
much.
Thank
Most
you, sir.
welcome.
Thank you. Recently, there are many changes in provisions related to trust and NPOs. So we are here to discuss about the various changes in Rule 17A related to accounts and audits, accounts and records to be maintained for charitable organizations. And there is a recent change in the Form 10B also. There's a very big form now. So what are the important changes in form number 10B and 10BB? And other relevant matters related to income tax as well as FCRA, we are going to discuss. Mr. Kadaswamy sir is going to explain important matters on these amended provisions. Yes. So we can start, sir. Now I request our secretary to introduce our speakers. Thank you, sir.
Thank you.
Good evening, all.
Good evening to you all.
Good evening, sir. Before introducing today's resource person, let us join for motto song. Raju garu, please play motto song.
What is it? Okay.
Due to some technical issues, the motto song is not getting played. Let's start the today's proceedings. by introducing our eminent speaker. CA Dr. Kandaswamy is a commerce graduate from Loyola College, Chennai, with several medals for his academic excellence. He is qualified chartered accountant from the ICAI, and he is also qualified system auditor from the same institute. He holds doctorate in the area of governance, engagement in the financial management of non-profit organizations. He is the founder and managing partner of Kandaswamy and Associates, Chartered Accountants, Chennai, India. For the last more than 4 decades, his firm is engaged in providing audit, advisory, consulting, financial management, legal compliance, governance, and several other related exclusivity NPOs in India and several other Asian and African countries also. Specialized in the area of non-profit finance and compliance. He is the pioneer in the country in promoting compliance for NPOs, particularly on FCRA and tax exemption matters for more than 4 decades. His field of specialization is governance, financial management, and legal compliance aspects of NPOs, non-profit sector organizations. He is also a research scholar on the topics of governance and its engagement with the financial management of non-profit organizations. With this brief introduction, I would like to take the proceedings by Mr. Kandaswamy Garu, and also I would like to announce that the daughter of Kandaswamy Garu, Preeti Kandaswamy Garu, is also joining with us for today's knowledge sharing for few minutes. Thank you, sir.
Thank you very much. Can we begin? Can we start?
Yes, sir. Yes.
Okay. At the outset, I wish you all a wonderful evening.
Thank you, sir.
I know that you are all so busy at this time, particularly at the end of this month. For many of us, we thought this month the end is going to be a great deadline, but fortunately, thanks to Circular 6, that next month will be deadline, and again October will be deadline. I would like to say at the beginning that CA Radha, your chairperson, has been so particular and also always following up with me in the last more than 2 weeks. It is because of her follow-up. I'm very happy to, spend some time with you all this evening. CA Radha, I would like to thank you, and also I'm very grateful for all your follow-up and help to make this evening possible for me to be with you all. And please
Thank you. It's my pleasure.
In
Thank you,
your
sir.
branch, your office bearers, and also the senior members, and also the brother professionals. First of all, I wish to say that the fact that you are all joined together this evening is a great gesture for the charities. And charities in India is from time immemorial. I must have shared with our members many times in the past 4 decades that charity has not begun with income tax or FCRA in India. Charity has begun from, the time of Rig Veda. In my research, I observed that, there is a concept of charity in the heart of Indians right from the olden times. However, in the last couple of years, doing charity has become very complex, very challenging, and particularly for us finance professionals, when we have to help and advise the charities, it is becoming so challenging. I am here with you this evening with my God-given focus and experience for the last 4 decades of struggle after struggle, particularly great struggle in the last few years, and very special struggle this year because of what you all know, what is happening with the audit of the NPOs and also compliance of the NPO regulations, very particularly the income tax compliance, and much more specifically, the Rule 17AA, which has come in for the first time after 50 years from 1973, when the 12A came into the statute, and Form 10B, the new audit report. However, I would like to say that based on my last couple of months' experience and great collaboration with many charities and also our own staff here, we are moving forward. We have moved forward with many, preparing the Form 10B utility for many trusts, and it is coming up well, and it is ready for uploading. With this initial positive thought, I would like to say that C.A. Radha was particular to focus on the tax exemption of the NPOs and also, if possible, FCRA. And I requested her to get the queries from our members. And I must thank you and grateful to you for getting the queries. I have seen them. I see 99.9% are from income tax. There is one on the FCRA, and that too coming from the donations. And so we will be happy to exchange thoughts and ideas and experience on the income tax. And if you have queries on the FCRA, I shall also be pleased to address those queries. So you can see the topic, tax exemption. So far, I've always been calling it tax exemption, but lately I started adding in brackets taxation. You will know why as we go further, because there is not only exemption, but a lot of taxation is happening with the non-profit organizations. And FCRA is a global topic now. Many countries know that FCRA in India is very stringent, very strict, lot of suspensions, lot of cancellations, non-renewals are happening on the FCRA front. And two important aspects we shall focus. One is the new Rule 17AA and the new audit report Form 10B and 10BB. Three focus areas: an overview of the exemption framework for NPOs, amendments and paradigm shifts in the framework for NPO exemption, and third, a practical approach to manage the new tax audit report 10B, 10BB. These are the focus areas. There is such a lot in the non-profit sector area. We can have one day, and nowadays we can even go 2 days, if not a week, on the various aspects of the NPOs, FCRA, GST, income tax, etc., etc. But we have to be very particular about our time, and therefore in the given time, I suggest that we focus on three things. An overview. Why an overview? If we are clear what is the entity we are dealing with, if we are clear what is the income of the entity that we are dealing with, and if we are also clear what is application and what are the issues connected to application of income, then we shall be ready for the Form 10B or Form 10BB. In a similar manner, if we are clear about the latest amendments, particularly the recent amendments in 2023 and also several amendments in 2022, and of course, year after year, there have been amendments. If you take last decade, I do not think there is any particular finance act which has not made amendments to the NPO tax exemption. However, we may not have time to go to all the amendments. It is important, or it will be very useful if we refresh the amendments for the last 2 years, 2022 and 2023. Of course, when we are covering 2022, 2023, we may be touching upon some of the 16, 17 or 17, 18, wherever they are relevant. Once we are equipped with these two, it is my experience that TAR or anything else, compliance becomes much easier for the non-profit entities. And therefore, we will have these takeaways. First one, we will enhance the familiarity with the tax exemption provision. We will also get more familiar with the recent amendments relating to tax exemptions for NPOs. And the third one, a hands-on experience to manage the new TAR, Form 10B and 10BB. We have started filling up since the TAR came, the utility came on the 24th morning. 23rd night, I think the Chandrayaan landed smoothly, and 24th morning, the utility, most awaited utility for 10B also landed. As one of our staff observed, Chandrayaan landed, sir. I said it has landed last night, and she said, no, sir, our 10B utility has landed. So somehow we have been waiting for it. And as you may all know, BB utility is still not there only. 10B utility is there, but 10B utility is the more complex. Once we are clear with the 10B utility, we should be quite fine or confident with the 10BB utility. Of course, we will have sufficient time for questions and clarifications. Feel free to ask more questions. There are already quite a few very relevant questions, very practical questions. Already took note of them, but you are free to ask more questions as it may come during the session. So, going to the overview, there are three things in the regulatory framework for NPOs. One is incorporation laws, or what you call it, registration of entities, legal registration of non-profit entities. Second is other laws, rules and regulations. And third is social security laws. Incorporation laws, you are all very familiar. The Societies Act, the traditional, which came the year 1860, and then the Trust Act, which came in India in 1882, which was not for public trust, it was for private trust. But the principles of the private trusts are absolutely applicable, such as the author, the trustees, the property that is dedicated to the trust, etc. Therefore, those concepts and principles are applicable. And Section 8 company, which was normally Section 25, and much before that it was Section 26 in the 1915 Act, Companies Act, etc. And then the last one is what's called Section 231, when it is defining person, there is no definition of trust. But when you go to certain other sections like 224 2A, the definition of voluntary contribution, and 1311, where the violated income is computed, though there is explanation about the trust, legal form, etc. And there are many trusts which may not be in any registration or incorporation, such as society or trust or company, but they would have come into they came into birth, they took birth from, for example, wills. There are many trusts which are formulated by wills, and there are also trusts set up by courts of law when properties went to court for dispute. There was also occasions where court has set up trusts. So there are in the fourth box, it's a miscellaneous box. So many other forms of trusts are also there. In other words, it need not be just the incorporation or registration is not the only way to get a non-profit entity. There are also other ways. Coming to the other laws, you are now familiar with income tax law, which we are going to discuss more. FCRA, if there are questions, we will also address them. GST is another huge area for non-profits. Today's, that's not our topic. Then there are also trust laws. If you take, for example, Maharashtra, you have Maharashtra Public Trust Act, Gujarat Public Trust Act, and there are certain states like in Tamil Nadu where I am, there was a proposal to bring a Tamil Nadu Public Trust Act, but it is withdrawn. The bill is withdrawn right now. That act is not come into force. Now, coming to the tax exemption directly, we can talk about two regimes, which you are all familiar, I am sure. Regime 1, which is under 1023C, with certain conditions, approvals are given. And 1021, you may be familiar, that is an exemption for scientific approved entities. There are entities which are approved under 35(1), 35(2). Those entities are eligible for exemption under section 1022. So this is regime 1. I call regime 1 itself as two regimes, two sub-regimes. I'll come to that little later. Regime 1 itself, I call, or I discuss two sub-regimes within the regime 1, which we will do after a few minutes. Then regime 2, which is very popular, very common. I'm sorry, I missed one in regime 1, that is 1046. You know, there are certain public bodies which are eligible for 1046, and the CBDT gives special approval for several such bodies, several such boards like the the city planning body or electricity body, several other bodies get approval under section 1046. These are all in regime 1 under the section 10 category. Now we come to regime 2, which is more common, more popular and numerous. That is regime 2, which is regulated by section 11 to 13. I think this clarity right in the beginning is very important for us to proceed further. Now, 30 seconds, I won't take more than that here. If we forget history, we will be condemned to repeat the history, they say. Therefore, if you look at the history, we know that 1922 Act was the first act in India, Income Tax Act, which is not the fact. It is not the fact. There was IT Act in 1860, 1886, in 1918, 1922, 1961, and so on and so forth. 1922 Act is more visible for us because whenever we refer to 1961 Act, it always says before the commencement of this Act. So we become familiar with the previous Act, that is 22, but there were previous Act. For example, in 1860 and 1866 Act, there was already a provision for religion and charity. You know what was the provision? The provision was deduction approach, not exemption approach. In 1860 and 1866 law, 1886 law, during the colonial times, any expenditure incurred on religious and charitable purposes will be deducted from the business income for the payment of tax. Whereas from about 1918, not 22, 1918, the concept changed. It became a separate exemption and not deduction from the business income. So 1922 Act had one section called 4.3, and in 4.3, exemption for income property held for charitable religious purpose was there, and 4.3 1A in 39, one big amendment was made. That amendment was exempting business income of charities with conditions that if a business income is used for charities, like what you are now having 11.4, and it was possible to get exemption at that point of time. That was the amendment. Then 431AA, small aa, for restriction of the jurisdiction of charities with taxable territories. This was in the year 1955. 1955. Why the restriction? 1947, the India got independence, and before independence, the territory was much broader, much bigger. After independence, the Indian territory, the taxable territory was limited to India, and Sri Lanka was omitted, Pakistan was omitted. So therefore, 431AA said that jurisdiction of charities within the taxable territories of India, Republic of India. Then came 1961 Act with continuous amendments from 2008 onwards. I mean, continuous amendments all through, but 2008 onwards up to 2023, paradigm shift in the amendments year after year. You may remember the section 215 proviso, then 2008, and then again, the initial was, it was 10 lakhs, and then afterwards it was 25 lakhs, and now it is 20% of the gross income. If it is income from trade, business or commerce, then the charity status will be lost, etc. is a major amendment. But that is only a starting. After that, there were so many amendments. We are going to focus on 2 years amendments, 22 and 23, quickly in a few minutes from now. Now, 215, charitable purpose. Several amendments have taken place since this came into the statute in 1961. For your information, 215 is not a national factor. It is an international factor. If you look at many countries, for example, if you look at the USA, they have something called 501c3. 501c3 is equal to our 215 and our 80G, etc. And 224(2)A is definition of income, which includes voluntary contributions. This also has gone through continuous amendments. Now, in a quick few minutes, let us and refresh our minds on the definitions of certain terms: person, income, religious purpose, charitable purpose, and application of income. Some of them are applicable for the for-profit sector also, like person is applicable, income is applicable, but religious purpose, charitable purpose, and application of income, which are crucial terms here in the NPO sector, are not relevant in the for-profit sector. You know, for a company or a partnership or a people like that, those definitions are irrelevant. Now, looking at quickly a couple of definitions. First is person. In the case of NPO, trust is used in explanation to section 224(2)(a), income, and explanation 1 to section 1311, computation, section 231, which is the definition of person, does not apply to a trust, an NPO. So a person here means not the definition of 231, but the definitions that are here. Definitions that are here says trust includes any legal obligation. That means it includes anything else. It is a society or a company or a will trust, etc. Everybody is covered under the definition of trust. Income Tax Act does not use terms like society, registered society, terms like Section 8 company, nothing. Income tax uses only one word, trust. You know. Then coming to income, of course, coming to the for-profit sector for other assessees, Section 231 gives the definition of persons, individual, partnership, company, AOP, etc., etc. Income for NPOs, it is 224(2)(a) and 12(1). 12(1), 224(2)(a), and 12(1) is specifically for other than corpus, any voluntary contribution, whereas 224(2)(a) voluntary contribution including corpus. And the definition of income in section 14, which is salary and house property, profits and gains of business, capital gains, other sources, none of them are applicable to the trust. There are old and age-old juridical support, the court case laws such as the Rao Bahadur, Kalabala, Kannan charities, such as the Yetiraj here in Chennai. Those two cases are the most popular cases where the court said that income for a trust is not as computed under section 14 under the various heads at all. Income for a trust is in a commercial sense, actual money available for spending on charity or religious purpose. Therefore, we have to be clear, income for a non-profit is not as per section 14, but commercial income. I mean, cash available for actual spending on charity or religious purpose. Religious purpose, absolutely no definition in the Income Tax Act or any other act. You go and see nowhere act, there is a definition of religious purpose, but of course, courts have defined religious purpose in many, many cases, including the Honorable Supreme Court of India. And another important concept, application of income. There is no definition in the Income Tax Act, but most of the topics under the income tax for trust is about application of income. What is application and what is the percentage? If it is excess, what happens? And if excess is not spent, what happens? So application of income is a very important concept for the non-profits. Just 30 seconds on this. I don't plan to explain this. 215, we are all familiar. Relief of the poor, the first limb, we call it. Education, second limb. Yoga, medical relief, preservation of environment and monuments, the advancement of any other object of GPU. The GPU is a very famous concept. As you know, it is there in the proviso to section 215. And as you also may know, the Ahmedabad Urban Development Authority, the Supreme Court has come very strongly on the various aspects of the GPU, particularly the price or the cost involved or the fees charged by GPU bodies, the decision in the Supreme Court, along with also the education sector decision came from the Supreme Court. So those two are there at the back. Now coming to the scheme of income tax, if you understand the 6 aspects, we understood 90% of it. First of all, 215 you just heard, charitable purpose. 224 you just heard, income, voluntary contribution. 1023C, regime 1. And I said there are 2 regimes within the regime 1. I'll go to that in a minute. 11 and 12, regime 2. 12A, AA is no more valid. AB, 12AB, current replacing 12AA is come 12AB, as you know, with effect from 1st April 2021. So registration and cancellation is a very important aspect for not regime 1, regime 2. For regime 1, it is approval. Whereas for regime 2, registration under section 12A is a very critical requirement. Section 13 is the restrictions. When there are violations, when there are deviations, when there are related persons are enriching themselves, then section 13 comes into play. And of course, 35 and 80G are for donor rebates. They are not for tax exemption. It's echo, no? Some echo there. Is anybody? Anybody? Not in my room. Do you also hear echo? Radha? See Radha? Oh? I hear some echo. Can you advise people to
Sir, it
mute?
seems Sai has newly joined, so he is creating some echo.
Sir, can you please mute, sir?
Raju.
All of you, sir.
Kindly mute if you don't mind. Can you mute?
Thank you, sir.
Okay. May I proceed?
Yeah, yes, sir. Please.
Okay. Am I audible, see Radha?
Yes, sir. Yes, sir. You're audible.
Okay. I've gone to the now income tax, not exemption. You can see the latest development is lot of tax is levied. For example, 115 BBC anonymous donation, there is no exemption at 30% on the aggregate. 115 BBI, a newly introduced section, again specified incomes are taxable at 30%. And of course, accreted income tax, you are all familiar, 115 TD. 115 TD is a exit tax, as we call it, meaning that we are exiting from the non-profit domain to a for-profit domain. So that is at MMR, maximum marginal rate, on the fair market value reduced by the liabilities. And look at the penalties. There are penalties. 271 capital AA, capital E has come into the statute now for those who are violating 13(1)(c). In fact, 13(1)(c) people are hit by 115 BBI. Also, they are hit by the penalty. And the penalty first time for related party violation is 100%. And second time it is 200%. And then, of course, you are familiar with perhaps 271K, failure to file form 10BD. So if you look at the scheme of income tax, there is clearly way forward to get full exemption if we comply with the provisions of regime 1. If not, we go for regime 2 and comply with the provisions, various provisions. Whereas if there is any violation, no more, judicial prolonged litigation, protracted litigation like in the past. Now it is all taxing. We will discuss that more as we go further. Now, 2 minutes on the regime 1. Regime 1. In the regime 1, there are this kind of exemption. What are they? There is education, exemption for education. There is exemption for medical. And there is exemption for substantially financed entities and others. And there is exemption for those who are below 5 crores. Previously, it was below 1 crore. Now it is below 5 crores gross receipts. And if it is gross receipts above 5 crores, then they have to go for what is called approval, specific approval. Whereas these people need not go for specific approval. Then there is also 1023C4, which is for charitable institutions of national importance, 1023(5) for public institutions, religious institutions of national importance. 5 is not only religious, also charitable, public, religious, and charitable. Whereas 4 is only for charitable. 4 in the 4, if religious activities are there, it will not be given. Whereas in 5, both will be given, public religious and public charitable. Then what will be the difference? The 4 will be eligible for ATG, but 5 will not be eligible for ATG. And 1021, you saw a glimpse of it earlier. Research bodies approved under section 35(1)(2) and 35(1)(3). 35(1)(2) is for scientific research, 35(1)(2) is for statistical research. So if they are approved, then it will be under 1021 and 1046, as we had a glimpse before, is specified income of body constituted by central and state government bodies and boards. Now, small history again. The education, which is now under 1023C and also under 11, formerly it was under 1022. And up to 31st March 1999, there were educational institutions. I remember from the late 70s that when I started practicing to middle 80s and 90s, we used to get several institutions exempt under 1022. One line, nothing else. No accounts, no audit, no investment, nothing. Whereas 1022A, similar situation was happening for medical institutions. Unfortunately, both were deleted with effect from 1/4/1999, and after that only, they all were incorporated or brought under the current umbrella, regime 1 of the 1023C. And 1023C came into picture, incorporating or covering all of them: medical institution, educational, charitable, religious, everything, as you just now saw here. They are in 1023C, there are educational, there are medical, there are religious, and of course categorized into substantially financed and below 5 crore and above 5 crore. Now, looking at the not requiring approval case. See, look at this. These are all not requiring approval case. If an educational institution or a medical institution is fully substantially financed, which means under Rule 2BBB with effect from 1/4/2015, then there is no approval required. There is absolutely no approval required. And similarly, if the educational or the medical institution is gross receipts are below 5 crore, Rule 2BC from financial year 21-22, assessment year 22-23, earlier it was 1 crore. Again, these are not required to go for approval at all. So you can see 1023 3AB and 3AC, educational and medical, and substantially financed as per Rule 2BBB, they don't have to go for approval. Now, what is this Rule 2BBB? Earlier, there was no definition of substantially financed. So there were many litigations going on. What is substantially financed? Even below 50%, some institutions argued it was substantially financed. So Rule 2BBB now says that exceeding 50% is the meaning of substantially financed. And similarly, 1 crore is now added to 5 crore. But you know the difference in the 1 crore and 5 crore? In the 1 crore before, one PAN or one legal body can have multiple institutions below 1 crore and still claim this exemption, 3AD or 3AE. Now, one PAN, even if it has many institutions, but all of them put together is exceeding 5 crore, then it will not come under this category. Earlier, it could have easily come, for example, 5 institutions, each one below 1 crore, they could have easily come under this category. Now they cannot come under this category because all put together, it will exceed 5 crores. Of course, ATG 2A, 3F and ATG 2B are special approvals for donor rebate. ATG 2A, 3F is for eminent institutions, 100%. And ATG 2B is, as you know, is for renovation of historical, archaeological, artistic importance to be a public worship, renowned throughout any state or states. Now, requiring approval, very simple. The other ones, other than the previous slide, all others. those institutions, education or medical, whose gross receipts are exceeding 5 crores, they have to go for approval. And similarly, public charitable under 1023C4 and public religious or public religious and charitable under 1023(5), they all have to go for approval. And 21 for research, 46 for body or authority or commission. They are specified income of a body or constituted by the central government. They also have to go for approval. Now I come to regime 2, most common for all of us. This is the most important one. Under the regime 2 is section 11. These are the sections. These are the sections and these are the conditions. Section 12A 1A speaks about registration under section 12A. Until 1/4/2021, 12AA was the section which was regulating the process or the procedure for granting registration and also cancellation of registration. As you may know, in the 12A was granting, but 12AA3 was the subsection which was giving the situations for cancellation. Now 12AB is replaced in the place of 12AA, and 12AB has similar provisions, including 12AB subsection 5, subsection 4, which has got the situations when the cancellation can happen. Show cause notice will be issued for cancellation of the registration. Then you have 12 capital A subsection 1 clause AB, which speaks about modification of objects and application to the CIT exemption within 30 days of such carrying out of modification. As you all know, previously there was no provision in the Income Tax Act for modification of the objects at all. I have seen the Act, as I showed you, from 1860 to 1922, 1961. Nowhere there was any provision covering modification. But I'm sure you are all familiar, when you go for a 12-year registration or 80G approval or a renewal, the commissioner says you put a clause that any modification will be done only after the prior approval of the jurisdictional commissioner of income tax exemption. I'm sure you are familiar with that situation. So many of us have put kind of a clause there that any modification will be done only after the prior approval of the commissioner of income tax. However, now that is not required, because the law says, section 12 capital A subsection 1 clause AB says that you don't have to go for any prior approval. You have to go for only for modification of the objects. Here again, if you modify something other than the objects, you don't have to go to the commissioner within 30 days, or you don't have to go to the commissioner at all. But if objects are getting modified, then you have to go to the commissioner. What about some other conditions? There are few other conditions. Audit and submission of audit report, we are familiar. And if that is not happening, the section 13(1) comes into play. We will see that later. Filing of return and return of income. Say again, this used to be, in the past, in my 45 years of experience, I think in the first 10 years or first 15 years, one thing we used to do every year very often, file application for delay, for adjournment, for extension of filing the return. But such extension is not anymore possible. The section does not allow extension of time for filing of the return. The due date as specified under section 139(1) are read with 139(4)(a) for section 11 cases and 4C for section 10 cases. There is no extension of time. Of course, we get some circular once in a while for condemnation. We will speak about it later. Again, if there is a violation in section 12A 1BA, section 1310, the recent section 1310 will come into play. And again, 11(1)A speaks of application of income, and a non-profit entity is supposed to apply 85%. If it is not able to apply, of course, there is a provision to accumulate for 1 year, filing form number 9A, as you are familiar, and form number 10 if you want to accumulate for 5 years. Now, what happens if there is a violation? If there is if there is excess, that is short application, comparing with 85%. Excess will be taxed under 115 BBI. And if accumulation happens, it will be not taxed, provided the conditions are fulfilled, the forms are filed, all the form filing 9 capital A and 10 are all online filing. There is no physical filing anymore. And if the accumulated income is not used, again, it will be brought under the 115 BBI for 30% tax. Similarly, 11.5 investments. 11.5 speaks about investments in prescribed modes. There is a long list there, and I see a query on that. I will come to the query later on. If the investments were not done in the modes prescribed under section 11.5, again, it will come into 115 BBI. In the past, if investments were not done, lot of litigations were going on. I do not know if you have heard about one of the earliest decisions called Father Muller's Hospital, Mangalore in Karnataka. And later on, there was a working women's forum in the adjudicature of High Court at Madras. Madras High Court also had a case on the women's forum. In these decisions, the Income Tax Department argued the entire exemption should be denied and entire income should be taxed, whereas the courts held no, entire income need not be taxed, only the income from the violated investment. If, for example, 5 crore is invested as in the non-11.5 mode, only the violated investment income should be taxed and not the full income. Whereas now all those decisions have become not relevant, because in the event of violation, they will all be brought under 115 BBI. This is quite clear now. Again, in a small historical development for regime 2, section 12 have been there all the time, bringing income to trust or institutions. Definition of income, we saw it earlier. 12AA conditions are there from 1973, but one small difference, the delays were condoned up until 30th June 2007. From 1st June 2007, the delay, the condonation, the power of the commissioner for condonation of delay was removed from the statute. So from 2007 to 2014, up until 12A, 12 capital A, subsection 2 came, there was a great hardship to institutions, NPOs, because if there was delay, they were not granted 12A, they were granted 12A only from the year in which the application in form number 10A was filed for obtaining 12A registration. Unfortunately, in 2014 November, the 12A subsection 2 came, saying that if you got 12A registration for 1 year, all the previous years are deemed to have got 12A, and no 147 reopening proceeding should be started. Very unfortunately, that is also removed now. Which means if there is a delay in getting registration under section 12A for the past years, there is no exemption. That is the current situation now. There is a query on that. I will also give answer finally when we go to queries. And then the 12AA, which was the procedure, this was introduced in the year Finance Act 1996. Until 1996, from 1973, there was only power to the income tax to grant registration. There was no power to cancel the registration. But from 1497, the procedure for granting and cancellation was introduced by the new section 12AA, and that was well used by the department. They used to grant lot of registrations, but there were cases also, cancellations happened under section 12AA, subsection 3, 12AA 3. And now that is also replaced by 12AB, recent one, when the procedure for fresh registration was introduced by the Finance Act 2020, but because of the pandemic and also the lockdowns from March 2020 up until 31st March 21, it was kept in abeyance, the new procedure. And 1/4/21 onwards, the new procedure was used. And as you all know, 30th September 22, they closed the new procedure. And there were still many NPOs who did not get the 12A, were under serious trouble. Fortunately, now this circular 6, you are aware, is again given life to those NPOs who have not got the 12A fresh registration. Now they have time up to 30th September 2023. This is the scenario. Now, by now you are clear, application of income is a critical factor for exemption. Accumulations whenever required helps for retaining the exemption instead of paying tax. And corpus investment is another aspect that has gone into a lot of changes. There is a query also. I will explain little later. Investments is also very important, section 11.5. We cannot independently read section 11.5. We have to read section 11.5 together with 13.1d. Together with 13.1d. There is a query on that. I will also explain the query. Audit of accounts is mandatory. In the absence of audit of accounts, section 13.10 will come into play, and the exemption will be lost. Only the expenditure, revenue expenditure, can be claimed. Same thing with the filing of returns. If the filing of returns is done on time, then it is an important compliance for tax exemption. If the filing of returns is delayed, then that is a reason for violation, and that will be brought under section 13 subsection 10 of the IT Act, and then only the revenue expenditure will be allowed, and not capital expenditure, not other expenditures from corpus or from excess accumulation or from the borrowings, etc. And by now, I am sure it is clear that restrictions are quite a lot, and violations are dealt with seriously with tax and penalty, and the implications are very clear. I do not want you to spend time on this. Sierra, am I still equally audible? Am I still audible?
Yes, sir.
Okay. I just want to confirm, I would like to say, this is a comparison of the exemption in regime 1 and regime 2. I do not want to waste your time. Just want to say one thing. Absolutely no difference between 11 and 1023C. Excepting, can you read 3, number 3? Anyone can read number 3 that is in yellow?
Accumulation of income for 1 year.
Yeah. Which is still available in section 11.1, that is regime 2, that is not available in regime 1 in the 1023 category. Whereas accumulation for 5 years is available in both. Section 11.2 enables 5-year accumulation. Similarly, proviso 3 to section 1023C also enables accumulation under section, accumulation for 5 years. In other words, regime 1 was like a cakewalk 20 years back or 30 years back. When I started practice, I never knew for the first 5 years, what is what, but I came to know that there is section 1022 and 1022A all over South India. Wherever possible, I had promoted the 1022 and 1022A. Both department and other assessees were happy because we need not spend too much time. It was so simple. As it went on, as the violations took place, as the amendments came through, today you can see there is no big difference between section 11 and section 1023C, excepting for 1-year accumulation. And 1-year accumulation is not a great thing, because if you don't have that, you can always go for 5-year accumulation, filing form number 10 and fulfilling 1 or 2 conditions. I think this is time for us to go for a quick look at the amendments of the Finance Act 22-23. So far, it's all the basics of the definitions, and then the basics of the various legal forms, and then the basics of the 2 regimes, and then the comparison of the 2 regimes with a historical perspective, from a historical perspective up to 2020-23. Having covered this, I feel this is a high time to quickly move to the amendments of Finance Act 22 and 23. Is this okay with you? all CA, Radha?
Yeah,
Or
yeah. Yes, sir.
shall we move on to this quickly?
Okay, sir.
All right, all right, all right. After that, you may consider a small break after checking with your people. Can I have my phone, please? What's the time now? 5:05, 5:05. Okay, 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 okay. So, something between. We'll see as it goes. Yes, you can join. No, you can join. இப்போ வந்துடலாமா? So I go to amendments in the Finance Act 22-23. For the quick, because it's in the quick memory, I would like to first speak about Finance Act 23, and then we can go to 22. In 23 Finance Act, there are totally 10 amendments, which are very important. We'll run through quickly. To the extent required, I will give explanation. If I feel explanation is not very important, then I would like to save our time for further discussions. First one is treatment of donation to other trust. You know, you have the sections there, section 1023, the third proviso in explanation 2.3, and section 11.1, explanation 4, clause 3, and it is from 1/4/24 effective, but donation, if it has started during this year, financial year, it will be covered in the assessment year 24-25. I'll give a little explanation later. This needs a little explanation. Number 2, time limit to furnish Form 9A and 10, as you are all aware. In the Finance Act, it was postponed by 2 months, but fortunately by the Circular 6 now, that is not necessary. We can still file after 2 months instead of August. We can still file up to October. And combining provisional and regular registration in some cases. This is also because difficulties faced in the provisional registration and again re-registration. The Finance Act 23 has combined. And then fourth one, trust or institutions not filing the application in certain cases. We will discuss this a little bit. I have a slide. Specified violations is number 5. That is again, this needs a little discussion. We will have a slide on that. And then the denial of exemption where return is not furnished within time. I already explained to you. So that is also another amendment. And then withdrawal of an important provision. Very sad. This is for the non-profit entities. Very sad because there are non-profit entities in Mofussil areas who are doing good work, good charity, but unfortunately they all may not have the advantage of latest knowledge or even guidance of our efficient professionals like us all, like who are gathered here. Unfortunately, they may have not filed things on time. They have not obtained 12A on time, and they are going to suffer because the facility that was there, that is 12A subsection 2, is withdrawn. Now it is no more available, and therefore from this year onwards, they will not be able to ask for past year's 12A. And then depositing back of corpus and repayment of loans and borrowings is a same amendments are there in both this 8 and 9. I'll explain a little later for better clarity. And the last one, 10th, is removal of certain funds from section 80G. They may not be so relevant for all it is too few funds. It's not so relevant for others. Now coming to number one. I may just touch upon the background or the history before I give the amendment. That's why 1 or 2 slides are more. So for example, treatment of donation to other trust. It is with effect from 1/4/24. 1/4/24, that means assessment year 24-25, and it means financial year 23-24, current year itself. So if any trust or NPOs are making donation to other trusts, this is important. Now, donation to other trust, the total, the income of the trust or institution under both the regimes are exempt, subject to the fulfillment of certain conditions. What are the conditions? At least 85% of the income should be applied. Apply 85% of the income either themselves or by making donation to other trust, which has been happening, which has been possible, which has also been found practical, because everything cannot be done by the same trust. And there are smaller trusts, particularly in interior places in our great nation, to do the work. Now, if donated, donation should not be towards corpus. This was one restriction. Under both the regimes, allowed to accumulate 15% of its income. Accumulation more than 15%, as we already said, accumulation can be done either for 1 year or for 5 years. In the case of 1023, only for 5 years. In the case of section 11, that is regime 2, both for 1 year and 5 years possible. Now, there were amendments in the past. What were the amendments in the past? Finance Act 2002 with effect from 2003-2004 assessment year. Section 11.2, an explanation was brought in. Payment to other trust or institutions treated as application of income. However, any payment out of accumulated income not being payment in the year in which trust claiming exemption is going for dissolution process shall not be treated as application of income. See, if a trust accumulates, let us say, 1 crore for the next 5 years, then the trust has to utilize that 1 crore only by themselves. It cannot pass on that money to another trust. In concrete cases, for example, when tsunami happened, I remember, and of course, many times before, during the earthquake time or during the major floods in the country, big NGOs will get a lot of money. They cannot utilize all the money themselves, and they will give it to small NPOs around the country. The case of tsunami across the seashore from Vizag down to Kanyakumari, and again that side up to Goa, Mangalore. Many small bodies got money from bigger bodies, and they had rehabilitation and relief work of tsunami disaster. Now, unfortunately, such a practice is not possible, that big NGO getting money and then giving to small NGOs to do that work is not possible. I'm giving a live example. Unfortunately, this is a big restriction. And of course, you may know that FCRA has made such a restriction full in 2020 September. 2020 September, along with the pandemic, there was also a big amendment in FCRA which said that no money can be transferred to another entity. Intertrust donations are not possible under the FCRA. Now, what is the intention? Accumulation made more than 15% must be spent by the trust on its own activities and cannot be donated to another trust. That is the idea. Now, further, another previous amendment, I was telling you that I may cover in the course of 22-23 some earlier amendment. This is one example. Corpus donation paid to another trust was application till 16-17, assessment year 17-18. But Finance Act 2017, with effect from 2018-19 assessment year, by the explanation to 11.1, an amount paid or credited to any other trust as a corpus of the trust, then it shall not be treated as application of income. So first restriction was accumulated income cannot be transferred to another trust. Second restriction is no corpus donation can be given. If it is, it can be given, but it will not be treated as an application of income. Of course, people ask, sir, what about the 15% automatic accumulation, sir? From that, can we give corpus to another trust? Yes, of course, no question, because accumulated surplus, the excess accumulation of 15% is after 85% utilization. Therefore, it is a free money available, and you will not be claiming that as an application for the current year. Therefore, you can give it as a corpus to another trust. Now, what are the reasons for the present amendment? This is the most important. Trust and institutions permitted 15% accumulation. defeating the intention of the legislature by forming multiple trusts and accumulate each layer. By forming multiple trusts and accumulating 15% at each stage, the effective application towards charitable religious is reduced significantly to a lesser percentage compared to the mandatory requirement of 85%. Amendment clause 3 of explanation 4 to section 11.1, in order to ensure intended application towards charitable or religious purpose, first and second regime, both the regime institutions giving donations to other institutions, both the first and second regime cases, only 85% will be allowed as application. In other words, what the government is kind of saying, a trust has, let us say, 10 crore income. It passes on, let us say, 5 crore to another entity, and that entity need not spend 5 crore. It is enough they spend only 85% of 5 crore, and that again passes on to third entity, let us say 2 crore. That entity, third entity, need not spend 85%. It is enough, sorry, need not spend 100%. It is enough to spend 85%. So in other words, if it is transferred like that to 6 other trust, or 7 trust, 100% of 10 crore need not be utilized, is the case of the government. You all know now how many such trusts are there who are able to pass on to other trusts. I am not saying no trust at all, no example at all. I'm sure there are some examples here and there who are doing that, but unfortunately, major percentage of the trust don't have such money to pass it on to other trusts, and then second trust passing on to third, fourth, and fifth at all. However, this is going to be a huge blow. It is a harsh kind of an amendment, and for genuine ones who have to give money to smaller ones to do the activities, particularly in the rural areas, mofussil areas, interior places, it is going to be difficult from the current year onwards. Now, impact of the donation to other trusts were allowed 100% as application from 1/4/23 onwards, only 85%. Several donors who give to genuine small donors will face hardship. Similar provision has happened in FCRA in the year 2020, September itself. This is the current reality. As auditors of these institutions, it's very important for us to take note of this development, that restriction after restriction on the inter-trust donations. And if we miss it out, this is going to it's going to cause a great problem by way of taxing. Now, just an example, look at this example. 1 minute will do. 10 crore eligible accumulation, 15% is 1 crore 50 lakhs. Balance 85% to be applied is 8 crore 50 lakhs. If there is an inter-charity 5 crore and program expenditure 4 crore, total 9 crore, there is nil total income, no tax payable, fully exempt. However, after the amendment, 8 crore 50 will remain the same, but the 5 crore inter-charity will be allowed only up to how much? 4 crore 25 lakhs only, 85% of 5 crore and not fully 5 crore. And therefore, the finally deductible is only 425 plus 4, 825, and therefore 25 lakhs will become taxable. This is going to be the reality for the future. Some people ask me, sir, can we not accumulate? Simple answer is, where is the money to accumulate? Because we have passed on 5 crore. Now the allowability is 4 crore 25. It is like some cases like 8G, 50% only allowed, 10% will be the eligible, then on that 50% will be deductible. Like that, 5 crore will be allowed as deductible only, 4 crore 25. Now therefore, insertion of the new clause is in regime 1, 23C, third proviso, explanation 2.3 to provide that any amount paid or credited other than the 12th proviso. In regime 2, it is a similar, another section 11.1, explanation 4, inserting 4.3, amount paid or credited other than 11.1, explanation 2 to any fund or trust or any university etc. Only 85% of the amount shall be allowed. Now, what is this other than 12th proviso and other than this 11.1 explanation to their corpus? If they are corpus, then the question doesn't arise at all here. Then time limit, without taking too much of your time, the time limit 9A and 10, when the section brought an amendment that it has to be 2 months prior, that is 31st August, that is today is 28th, and this week on 31st. And in fact, C. Radha was asking me, sir, that 31st is deadline. We know now that is not a deadline, but even before the this 31st, we should have. And that is why I am happy to, agree to spend time today, but you don't have to be under tension at all. There is time extended up to another, usual due date, 2 more months. So you can file 9A or 10 within next 2 more months. That is the time allowed for filing the return of income. I don't want to waste further time on this. So I skip and go to number 3. Number 3, combining provisional. Here also, I do not want to take much of your time. There were 2 types of registrations brought in the Finance Act 2020. One was fresh registration for those who already have 12-year registration, but it will be for 5 years only. Second category, for those who did not have 12-year registration, go for a provisional registration, and that is for 3 years only. And in that 3 year, if you want the registration in the first year, you have to apply 1 month prior to the commencement of the previous year. For example, if you want now, for current year 23-24 financial year 12A, you cannot get. You have to apply, but you will get only for the next financial year 24-25. Not only that, after commencement of the activities within 6 months, you have to apply again for fresh registration. And if not, then again, before the expiry of 6 months, before the 6 months of the expiry, you have to again apply for fresh registration. So much confusion was there. Therefore, now they have combined both. I do not want to spend more time on that. And then I go to non-filing of the application for renewal on the specified violation. Here we will spend a little time. First of all, registration. 1023C, first and second proviso, trust and institution has to apply for the provisional registration valid for 3 years and 6 months, and the commencement of the activities. No, this is okay. 12A explanation, where any income derived from property held under trust wholly in part for charitable or religious purpose has been applied other than for objects of the trust. Secondly, trust or institution has income from profits and gains, and which is not incidental to the attainment of the objectives, and separate books are not maintained. And thirdly, trust or institution applied any part of its income from the property held under trust for private religious purpose, which does not inure for the public benefit of the public. Trust or institution established for charitable purpose, created or established after the commencement of this Act, that is 1961 Act, has applied any part of its income for the benefit of any particular religious community or caste. These are all specified violations by the Finance Act 2022. Now, 12AB further says, any activity being carried out by the trust or institution is not genuine, found to be not genuine, or not being carried out in accordance with all or any of the conditions subject to which it was registered, the trust or institution has not complied with the requirement of any other law. This is a draconian. Any other law. It can be, what do you mean any other law? It can be for an educational institution, the recognition is delayed, the recognition is not there. It can be for a college or a school, the building approval is not available, it is applied, but it has not come through. It can be any other. Some people were asking in some sessions, what about vehicles, sir? If the trust vehicle on the way there is a violation and the police gives a notice for payment of penalty, what happens? People ask such questions because you do not have the definition of any other law. It can be any other law. But one thing, the order, direction, or degree by whatever name called, holding that such non-compliance has occurred has either not been disputed or has attained finality. This is very important. If it is disputed or if it is pending in the court of law or if a final order is not yet passed, it cannot be said that there is a violation of any other law. So until the finality is arrived, it will not be considered as a violation. There is one more G. I come to it little later because that is also coming up. In the introduction, on cancellation of registration, total income of the institution are subject to exit tax. This is the problem. This is not the cancellation. One is the cancellation, after which you will not get the exemption under section 11, regime 2. The other is that it will be considered as an exit from the non-profit to for-profit, and therefore it is proposed that an exit tax under 115 TD will also be applicable in various situations. What are the situations? Number 1, 12 capital AB4, that is the 6 specified violations, and when the registration will be cancelled. Finance Act 23 has added one more violation, providing incorrect or false information at the time of making the application for registration. Now, why is this new provision? During the period of April 21 up until September 22, many numerous entities applied for 12A fresh registration and also provisional registration, and they were all granted. The department seems to have now information that many such applications were false. Incorrect informations were provided. False informations were provided. And therefore, now they have brought up this. If it is found out that incorrect or false information is provided at the time of making the application, then it will be also another specified violation and will 115 TD, that is exit tax provisions, will come into operation. Situation 2, if an organization fails to apply for the renewal after 5 years, and all those organizations who did not apply for renewal under section 12AB by 30th November 22, now it will be 30th September 23, 30th September 23, by the circular 6, the latest circular 6. In other words, even if there is no direct violation of the act, but once the organization ceases to be a 12AB registered entity, it will be deemed that the registration is cancelled, which means it will go to accreted income tax, 30% tax on the fair market value reduced by the liability. Exit tax is a tax on the market value. It was proposed to tax when the registration is cancelled. CBDT, through a circular 21, cautioned the tax authorities that genuine organizations need not be harassed by using the exit tax provisions. Denial of exemption where return of income is not furnished within time. Delayed filing of the return of income. Trust or institution registered under section 12AB requires to file the income tax return as per 139.4A, and the regime 1 1023 cases are required to file under 139.4C. Now, Finance Act, if the total income exceeds the maximum amount not chargeable to tax, there is also a question on that. I will come to it later when I have to answer the questions. Finance Act 22 inserted a subsection 8A, which you are aware, section 8A, subsection 8A to 139, to enable filing an updated return. It provides that any person may file updated return whether or not such a person has already filed the original, belated or revised return for the relevant assessment year or not. To avail exemption, it is necessary to file the return. Unfortunately, such updated return is not possible for a non-profit entity because Finance Act 23 has specifically restricted the return filing to 139 and 139.4 cases, restricting the filing of 139.8A, which implies that the exemption under section 11 shall be withdrawn if the updated return is filed under section 139(8)(a) by a non-profit entity. So what happens? Organizations cannot claim the benefit of exemption if they file an updated return of income. They simply have to, they come into 1310 and they have to end up paying the tax after deducting the revenue expenditure. It is to be noted that filing of updated return shall be considered as a violation of condition under section 12 capital A 1BA, and consequently 1310 and 11 shall be applicable. 1310 is the provision for allowing only the revenue expenditure on the gross income, and 1311 is the computation. Read with 1310. 1310 and 11 provide for taxation for specified violations, including the violations under section 12 capital A 1BA, which is nothing but a delay in filing of the return of income in ITR 7. Withdrawal of an important facility for genuine, I have already discussed this, the 12A cases. That is the 12A, as I said earlier, it is withdrawn. 12A2 is now withdrawn, and therefore people who do not have the exemption 12A for earlier years, they have to start paying tax. These two need a little attention, application out of corpus and impact. And same thing for the loan also. Both loan and the corpus need a little attention. I'll not read this. I'll explain in a very simple way. Corpus donation was eligible. Corpus donation was not at all income within the definition of 224(2)(a until 224(2)(a came into the statute. Once 224(2)(a came into the statute, corpus donation, that is voluntary contribution with a specific direction that they shall form part of the corpus, were considered as income, but 11(1)(d) was introduced. Section 11, subsection 1, clause D says corpus donation shall be exempt, considered as applied application, like 11(1)(a, 11(1)(b, and 11(1)(c). But later, the amendments came to say the corpus donation cannot be claimed as exemption unless it is deposited under section 11(5) mode. Now, for the past many years, who have had the people had the corpus and they claimed it as exempt, now they cannot claim that as an exemption unless it is distinctly deposited in a separate bank account or an FD. Only then it can be claimed as an application under section 11(1)(d). Now, what happens if the corpus donations are prior to 1/4/21 and it was spent? Now we want to replenish it and claim the exemption? Not possible. I do not know the rationale for 1/4/21, but from 1/4/21, prior to 1/4/21, if there was corpus donation, they will not be considered even if the deposits are made now for claiming an exemption under section 11(1)(d). Another restriction is such a corpus utilized for any other and not invested in 11(5) is possible only for 5 years. There are 5 years from the year of receipt of the corpus, not for the long future. Again, both the restrictions are a very, very harsh restriction, because many entities, for survival purpose, they use corpus for revenue expenditure. And only when they are able to get some money, they can put back to the corpus. But no guarantee that they can get such money within 5 years, because they struggle, initial period they struggle. So this is a very harsh restriction. Similar provision is also for loans and borrowings. Loans and borrowings, you may be aware that in the past, there were so many litigations. Loans were not considered as income, therefore application from the loan will not be considered as application. And if the application in the initial years are carried forward, that was also not allowed. There was Supreme Court decision which allowed, but now the act is amended to say that, this carry forward is not possible. Fortunately, some hope was repayment can be allowed. Now, the amendment brought repayment, but further amendment has brought another problem for the repayment, that is, If the loan was taken prior to 1/4/21, just like in the case of corpus fund, it cannot be repaid. If it is repaid, it will not be considered as an application. Similarly, the loan taken after 1/4/21, beyond 5 years, if the repayment happens, also will not be considered as application of income. Many are questioning, sir, very difficult to get a loan from the bank. And we cannot dictate the repayment schedule 5 years, within 5 years, because I want to claim the repayment as an application of income. They give for 7 years, they give for, we cannot repay also if it is in 5 years. By now, you know, these two provisions are quite harsh for the non-profit entities. So this is time, I think, what's the time? CA Radha, may I please make a suggestion if you don't mind?
Yes, certainly.
Since it is 5:45, more than 1
Sure.
hour and 45 minutes, I feel as we do, there are only two possibilities. One is a break, another is a breakdown. You know, I am
Yes,
sure
sir.
we will be in
We'll
a
break
break.
for, yeah, we'll break for tea, sir.
So, do you think I myself need just about 5 minutes? So,
Yeah, okay,
if
sir.
you don't mind, can
No
you
problem, sir. We can break for tea, sir.
members,
5-10 minutes
can
we
you
close out.
request
Yes,
members
sir.
to consider 5 or maximum 10 minutes break? Then we continue to the most
Okay.
important one is our the what is unfolding. That is the new audit report in 10B. You know, all that we discussed so far is a good knowledge, but now comes the time to utilize this knowledge for our certification of tax audit report, isn't it?
Yes, sir.
So is it all right that we take maximum 10 minutes break and then
Yes, sir.
we
Yes, sir.
start
Please.
with Form 10B?
Yes, sir. Please.
I hope the
We'll break
members
for tea, sir.
agree. Members will
Yep.
agree, understand?
We'll break, sir. We'll break for tea for 10 minutes.
Okay, okay. I'm just
Okay, sir.
muting
Thanks.
it. I'm not closing it. I'm just
Yes,
muting
sir.
it. Okay?
Yep.
Okay, sir.
Fine. I'll just mute it and I'll join again.
నెట్ తీసేమన్నారు కదా సార్ ఇందాక 602 తేడా వచ్చింది తీసేమన్నారు ఫిక్స్
ఇంకా ఇంట్రెస్ట్ డిపాజిట్ అయిందా?
Good evening to you all. See Radha, am I audible? Hello? Hello,
Yes,
see
sir.
Radha.
Yes. Yeah. You're audible, sir.
Maybe start
Yeah, we
again.
can start. Yeah, we can start, sir.
Okay.
We can
Okay.
start.
All right. First of all, I thank you for your patient hearing for the last 1.5 hours plus. There was small interruption in the beginning, but I think we made a good way forward, and we have covered the basics of exemptions, and also we went on to the amendments 23 and 22. And in the course of 22 and 23, we also touched upon some amendments of earlier years, that of 2003 and 2016, 17, 18, etc. Now it's time for us to go to the new audit report form number 10B. We will be now combining two things. One is 17AA, the new rule, and also the new audit report. So first of all, I wish I have time, or we have time for class by class analysis. But if not such time, at least, most important things, starting with the basics of Form 10B, we shall cover in this next 1 hour, nearly an hour. Of course, we will have time to break and go for question answer. So, audit report in form number 10B and 10BB. Why audit report required to be filed? Now uploaded. Section 12A, conditions for applicability of section 11 and 12. In 12 capital A, subsection 1, class B says, total income of a trust or an institution computed without giving effect to the sections 11 and 12 exceeds the maximum amount not chargeable to tax. Currently, it is 2,50,000 in any given financial year. And 12AB2 says, 12A1B2 says, the accounts for the year has to be audited by a chartered accountant furnishing the report in the prescribed form. So this is the background or the necessity or the mandatory requirement to go for audit report. In the past, so many developments. I do not want to take your time. Many used to not to file this form, miss out filing the form. Then there were case laws to say that you can file before the completion of the assessment. There were even case laws to say that you can file before the appeal proceedings are closed, etc. Nowadays, it is not so. If the audit report is not filed in time, then it is a violation. Then it comes under section 1310 and also gets taxed. Of course, there were circulars year after year. You must have used or surely heard that for 17, 18, 19, there were circulars saying that the jurisdictional commissioner has power, discretion to admit the application, condoning the admit the audit report, condoning the delay. Now, when is the due date for filing the audit report? It is for assessment year 23-24. It is 30th September 2023. Next month. Timely filing mandatory. File the form 10B. File the form on time. Filing form now is non-negotiable. Delay is not to be condoned. Mode of audit report. With effect from 2021, it is required that Form 10B is mandatorily filed in the online mode only. Form 10B is assigned to a CA by a taxpayer. Practicing CA can upload and e-verify the form using the registered, active and valid digital certificate. The taxpayer then has to accept the request and e-verify the same using the taxpayer DSC to complete the submission process. The audit report is considered filed. If any step, including the last but one step, is missed out, it will not be considered as filed. I have cases come to my attention from some of our colleagues that our member has duly filed the audit report in form number 10B in the earlier years or BB, but the acceptance did not happen by the taxpayer. Though the auditors do that, in some cases it is left to the taxpayer because they have someone to help there and they are trying to do, but unfortunately it was not done. And now it is considered as not filed and the delay is quite a lot. It is quite a lot. In some cases it has exceeded also 365 days, which means the jurisdictional commissioner has no power and it has to go to the CBDT for condonation. What's the need for the new form? From the Finance Act 2020, many changes are brought to relating to charitable institutions. The compliance or violations or the status of those changes or amendments are to be captured and hence a new form is introduced. If I can say, the new form 10B captures almost A to Z of the income tax provisions applicable to a non-profit entity. Someone can say it is a 360-degree coverage. Nothing of the provisions left out in the audit report. In the previous report, it was so simple. We used to file only 3 places: the application of income, and then the 15% accumulation, that is excess over 85%. If it is there, if it is not there, that is also nil. And if there is a kind of accumulation in Form 9A or Form 10, 1 year or 5 year, we used to also fill that. But now it is not so. It is such a lot. There's no separate penalty prescribed for the non-filing, but the Section 13(1) says that no exemption will be allowed. Only revenue expenditure will be deductible. Everything else will be taxable. Under Section 13(10), if there are violations of Section 12A(1)(b), audit report in form number 10B or BB, and violation under Section 12A(1)(ba), filing return under Section 139(4)(a) for 11 case within the due date or under subsection 1 to 4, then it will be not exempted. Only revenue expenditure will be deductible. The entire other income, net income, will be taxable. Now, new audit report in form number 10B or 10BB. See, these forms, as you know, come from the rules. These forms are not isolated or independent of the rules. So, IT Rule 16CC and 17B provide the audit report format. The format is 10B and 10BB. Rule 17B prescribes audit report in the case of charitable religious trust covered under Section 12A(1)(b)(2). In other words, second regime. And it used to be Form 10B. And for 16C, it was the first regime, and it used to be, the form used to be 10BB. These two are before the amendment. Now, after the amendment, what is the situation? This is the situation. Income Tax Third Amendment Rules 2023, CBDT Income Tax Notification 7 dated 21st February 23. New Form 10B and 10BB are applicable to both the regimes, that is 1023C and Section 11. Effective from 1st April 23, audit reports have to be issued only in the new Form 10B and BB in the assessment year 23-24 onwards, the current assessment year onwards. So Rule 17B, Section 12A 1B2, above 5 crore is 10B, and any other case it is 10BB. Rule 16CC says 1023C 10th proviso B, 1023C 4, 5, 6, 6A. For these cases, it is Form 10B below 5 crore and above, above 5 crore Form 10B, and other cases it is Form 10BB. But there are some criteria here you may please notice, and that is the total income of such institution without giving effect to the provisions of 11-12 of the Act exceeds rupees 5 crore during the previous year, or such trust or institution has received any foreign contribution during the previous year, or such trust or institution has applied any part of its income outside India during the previous year. So, in a case, the income can be below 5 crore. But if it is receiving foreign contribution, then it is not Form 10BB, it will be Form 10B. Similarly, if any income is applied outside India, you are familiar that outside India is covered under Section 11(1)(c). 11 subsection 1 clause C is the section which covers the application of money outside India. If it is applied outside India, you know, if the board approval is required. If board approval is not available, then it will be taxed at 30%. Now, if a trust has below 5 crore income, but there is application outside India, either or, it is not all, either or, below 5 crore and an FC, or below 5 crore, no FC, but application outside India, then Form 10B will be applicable, not 10BB. In other cases, for example, a case where it is 4 crore and there is no FCRA money, there is no outside India application, then it will be 10BB, not 10B. Just to give an idea how complex it has become, before the amendment, 10B had 5 pages. But in 5 pages, we will hardly fill up 3 places. Surely one place we will fill up, that is application of income. How much is applied? 15% only if it is there. If it is 100% applied, there is nothing to fill 15%. And excess application only if there is a 1-year accumulation or 5-year accumulation of filing 9A or 10. If both are not there, then it is just in one place only, that is the application of income. You know, whereas now it is 17 pages, Form 10B, 17 pages. And coming to the number of clauses, previously it was 16 clauses, but only 3 place filling or 2 place filling or 1 place filling. Whereas now it is 49 clauses, 49 clauses, and each class has so many things to be filled up. Now 10BB pages similar, 6 pages before, 6 pages also now, but in terms of clauses, earlier 19 clauses, now it is 32 clauses. A quick look of the new areas of reporting: registration details, management related, objects, details of place where books of accounts are maintained, advancement of GPU if there is any, then TDS related, donations received in kind, Form 10BD related information, foreign contribution information, application of income more than 50 lakhs, specified violations, Section 40A 1A, that is the failure to deduct tax, and 40A3, that is exceeding rupees 10,000, and for 269 SS for the taking of loan exceeding 20,000 in cash, and 269 ST for 2 lakhs cash transaction aggregate at a time, and Section 269T for repayment of loan in the modes. Cash mode, if it is cash mode, it's a violation. So you can see almost A to Z applicable or to be covered in the new form number 10B. Now, I go to the new form number 10B very quickly, and give me 1 minute, please. Check on the phone whether she will start now or with the utility. With the utility. So the audit report now talks about both are here in the audit report. We have to use only one. Either it is a regime 1, 1023C, or regime 2, section 12A. And then you can see one place that is in our opinion and to the best of our information, according to the explanation given to us, the particulars given in annexure are true and correct, subject to the following observations or qualifications. Many people are asking, if we put qualifications here, what happens? If the assessment is through faceless, using artificial intelligence, what will happen? In my opinion and to the best of our information, according to the information given, the subject to the following, again, subject to the following observations or qualifications, you can see the audit report is much more covering now, expecting much more assurance from the auditors than before. Now, coming to the audit report annexure, total income, expenses, assets, liabilities are all covered in the audit report after the examination of the books of accounts maintained. Audit report in form number 10B title audit report under class B of the 10th proviso or subclass 2, class B of section 12A1. In case of a fund or a trust or institution or any university or other educational institution, etc., both the regimes are covered in the audit report. Now, in the part 1, now they have added also the income and expenditure. Previously, only profit and loss account, it is not correct. Actually, the correct nomenclature is income and expenditure, or in agreement with the books of accounts maintained, the said fund or institution or university, and we have obtained all the information to the best of our knowledge. And part 3, when you go to part 3 old was, the books were kept by the head office and branches of the above named trust visited by us so far as appears from our examination of the books and proper returns adequate, etc. Now, in our opinion, the maintained and the registered office of the fund or institution or other educational medical institution at the address mentioned at serial number 14 of the annexure. Rule 17AA now says the new rule that if the registered office, if the books are not maintained in the registered office, or if the books, some of the books are maintained outside the registered office, then the institution has to pass a resolution and together with the minutes, it has to notify the assessing officer where the books are maintained other than the registered office. So 17AA books at the regional registered office is fine, but if it is in other places, intimation to the assessing officer has to be made. There is no format for the intimation. There is no format for the minutes. There is no mode for intimating to the officer, whether physical or through digital. In the portal, there is any link to intimate. Nothing is available as of now. And you can see a sample case where we are trying to say the place of books maintenance more than 50 places. This is nothing at all. Some of the non-profits are having in 120 locations, and I know 1 or 2 entities who are all over South India. They will be having minimum about 8,000 institutions under a single entity. And you can imagine the number of places they are maintaining, their schools, their colleges, their hospitals, and various other institutions run by them. And also about salary payment, not to trustees or board members, and total trust or institutions property used not by the trustees or board members, the correctness of them. How do we confirm the correctness of them? It is going to be a Herculean task for us. And this is just a format that we have developed. This is not given by the rule or the any form. We have developed this for the units where the books are maintained in other places. Name of the unit, address, unit in charge, who is responsible for the maintenance of books, head of the institution, who will certify that the books are maintained there, etc. And in see, note one thing here. Most important to note here is application also has to be certified by us. Previously, income only. Now it is application of income also has to be certified by us. So again, the observations and the qualifications have to be given. And similarly, if there are 40A3 violations or 40A, 1A or TDS, etc., how do we notify is a question. So it goes on like this, with various annexures. You can see here so many annexures. And I am thinking that it is high time for us. It is high time for us to go to the utility itself. Actually, for a long time, we have been waiting for the utility since 1st of April. And every day we used to keep on go to the downloads and go to the ITR 7 and Form 10B and see whether utility. Fortunately, ITR 7 utility came sometime back, and only on 24th morning, one of our staff suddenly informed Chandrayaan has landed. So I said Chandrayaan has landed last night. But for us, the small Chandrayaan is the utility for Form 10B. Fortunately, it landed and we started using it, and we are finding it not easy, but possible. It is not impossible. We have already filled up quite a few utilities, and initially there were some issues, but now it seems to be working quite well. So my intention is next 10 minutes or 15 minutes maximum, go through the utility quickly, not everything, certain portions of the utility. And then you must have already started using it. And if you are experiencing some difficulty, we can also discuss those difficulties. We have filled quite a few of them, but not so many. We have hundreds to fill. We have only filled up about 5 or 10, and some others are in the range of about 50% or 60%. However, I am confident that we can discuss if there are some difficulties faced by you. And about 17 AA, the maintenance of accounts, I do not want to take your time, excepting saying the passing of the resolution for intimation is necessary. And then also, once the intimation is given regarding the place of books of maintenance, I am sure why they are asking, you are aware. Power of survey is extended to charities also, and in 2017 itself. Therefore, I think it is for certain important reasons they are asking these addresses, and there are all categories of NPOs have to give this. And my suggestion is now not to go into so much of 17 AA, excepting saying 17 AA has brought a system of accounting to the NPOs. Quite a few provisions in 17 AA are complex. One of the most complex that we have found and many entities have found is the record of properties. There are institutions who are not just 20 years and 50 years old, but 100 years old, 200 years old, 300 years old, much more. We have 1,000 years old too. How do we, fulfill the requirement regarding record of properties is a major question. People are struggling. They are trying to list, and then we are hopeful that we can succeed in those cases. Having said this, now I would like to quickly go to the utility itself, and CA Radha, you may please feel free to invite Preeti, and she can start the utility together with our staff here. There are staff here, Rosalind, who has been using the utility quite well, and also there is Soundarya, who is also started using the utility. They will start the utility, and I am here to explain as I'm sitting. I'm continuing to explain. Okay.
Okay, sir.
Is Preeti online?
Yes, good evening. I'm here.
Yeah. Good evening, madam. It's my privilege to introduce Mrs. Preeti Kandaswamy. She's a practicing chartered accountant and executive partner of Kandaswamy and Associates. She is specializing in legal compliances, governance, and financial management of NPOs. She secured All India 16th and 41 rank, respectively, in C intermediate and final examinations. A gold medal from Stella Maris College for her bachelor degree in commerce. A state rank in Tamil Nadu higher education examination, and first rank in Chennai chapter in the Certified Information Systems Auditor (CISA) exam conducted by ICAI USA. She is also holds a post-qualification certification in international taxation from the Institute of Chartered Accountants of India and was awarded a full scholarship by Goldman Sachs for a short-term MBA with the Indian School of Business, Hyderabad, for a part of their Global 10,000 Women Initiative. She is a regular speaker in professional and academic circles, and besides SILC, she has also addressed the Chamber of Commerce, Income Tax Department, and various non-profit forums on the subject of taxation and FCRA. She has also co-authored the book on GST for NPOs along with Dr. M. Kandaswamy, FCA PhD. Preeti had various leadership positions in her student days, including Vice President of Students' Union, Stella Maris College. Her other areas of interest includes reading, writing, and Western classical music. She is a trained classical paintist. She is a daughter of Mr. Kandaswamy, and now I welcome Preeti Madam to this group. Thank you, ma'am.
Good evening, ma'am. Thank you very much. Respected office bearers of Kakinada branch and respected members. It's an honor for me to be here this evening to speak to you about 10B. So at the outset, thank you very much for this opportunity. As Radha ma'am mentioned and my father also said, we will be getting into the practical 10B utility right now. So I would like to present it to you like this. I am aware that many of you will already be familiar with the utility. Some of us may be in various stages of dealing with the utility. But for the benefit of everybody, I would like to just quickly run through the clauses. And then after that, we will go to the utility. And in the third step, I would like to share with you our process that we are following in our firm for, to comply with this form. I have to say it is still in progress because though we have been in our firm, we have been working on this right since February, but the utility itself was released only 3 days ago, as you're aware. So it is only after that that we know exactly what is required to be filled, how the software expects us to present it, etc. So we will start with, I will share my screen now and just quickly run through the clauses as we have analyzed them. Is it visible now? I think you can probably see my screen. So as you know, the form 10B is the more detailed form, and we will focus on that because 10BB is essentially just a condensed version of it, which is applicable to smaller clients. But once we know how to deal with 10B, then 10BB is really not an issue because most of the clauses, it's just taken from here and put in 10BB. So where we start with the basic details, this has not changed much. Only one point I would like to draw your attention to here is about the other addresses, registered address and other addresses. As my father was mentioning in his presentation, it is required to pass a resolution and then give intimation. So here, the way that we have been discussing about this, right now we are in August 2023. So the question is 7 days since when should the resolution be passed? When should this intimation be given to the AO? How should it be given? These are all issues which are not clear. But we have said that now there will be an AGM, which is, in case of societies, there will be an AGM, which is going to be conducted very soon. So a resolution can be passed, and then within 7 days of that resolution, at the meeting that it is passed, we will perhaps send it by an email, because right now we don't have any other mode. They have not released an online form, or even on the portal, there is no provision really to do it. So this is the only point I would say in this first basic details. Everything else is very simple. Then we go on to the legal portion, what type of oddity it is, a registration. Now, most of them have got their renewals last year in Form 10.8 NAC. So that is also not an issue. Then we have the management details. clause 10, which is management details. Again, it is pretty much the same as it was earlier. The objects of the auditee. Here, of course, we have to make sure that it is matching with what is in the form 10A. When they applied for renewal, they would have mentioned clearly what their objects are. So throughout this form, the way that we have been looking at it is filling is one level. We fill it, but as auditors, we are expected to verify, as we are all aware, in any audit report, we have to have audit evidence. We have to have a process which is backing what we mentioned here. So when we check the objects here, we also make sure it conforms not only with the 10A, but also to their actual activities in the current financial year. So as we go further down, you will see they're asking about any modification in the objects, commencement of activities, that is if it is a new trust. And then this is a major issue which generated a lot of discussion, this rule 17AA, where they have given extensive guidelines about how the documents have to be maintained. So a little later, when I share about our firm's process, I will also show you the templates that we are designing and which we are using with clients now to comply with this clause alone. And then coming next to the projects and institutions which are being run. So here I would like to point out, we can link this back to this clause here of the objects of the auditee, because these projects which are being run, if we see this, and usually the financial statements in the case of most trusts, NPOs, as you're aware, it will be unit-wise. Each project or institution will be a subunit and they will have a R&P, IND balance sheet. So from that, we can make out also if this clause, this objects clause is satisfied. There are 49 clauses, and as we go on, you will see a lot of clauses are linked to each other. It's not, we cannot look at the form in isolation, each clause in isolation. We have to look at different clauses. And at the end of it, I will also share a simple method which we are in the process of developing. I say process of developing because, as you know, it's very new. Unlike other things, like FC return, which we have been filing for years, where we have an established process. Being the first few days of implementation, all that we are sharing with you is, in fact, we're still doing groundwork, but we would like to share it with you in the spirit of, that we work together to find the best way to go about these things. So then we come down to, after their projects and institutions, another major focus area, if you see, one is the 17A, Rule 17A, maintenance of books. The form is also trying to find out about, advancement of general public utility. Are there any activities in this, etc. Basically, where is revenue being, is there any possibility that tax is payable by these entities and it is being missed out, any escapement of revenue. That is the idea in which they've drafted these things. Then we have business undertaking under 11.4. You may be aware the difference between a business undertaking, which is being taken care of by the trust, like a property of the trust, and any other incidental business that is incidental to its objects, like a pharmacy being run by a hospital or a bookstall being run by an educational institution. So the clause 18 deals with that. I am intentionally just rushing through the clauses. The idea is just to know what all is in the form for those of us who have not gone through the form in detail before. So the intention of what I'm doing right now is not to go into each clause in detail. If something is, specific, I will take time to mention it. If not, we are just quickly going to run through it so we can see the utility and then we can come to the practical process. TDS on receipts. Again, here it's interesting. If you see, it says only TDS under section 194C, J, H, Q. From our experience, the majority of non-profit institutions will have TDS under 194A because they all have deposits. Bank deducts tax on deposits. A lot of times they may have I, rent, but generally, if you see, these are there in those cases where there is some activity being carried on for a consideration, like a business, because 194C is contract, professional services, commission, purchase of goods, etc. So this is not, initially we were thinking that, it would, when they ask for TDS, we have to list the whole 26 AS, but it is not so. It is not the entire 26 AS. It is only with respect to these 4 sections. So this clause should not pose a big problem. Then we come to the violations. Clause 20 is about, 1310, which talks about all the violations and the effects if there is a violation. The next major focus area here is the receipts. If you look at clause 21 to 27, these are all about the voluntary contributions received by the trust. They are relating this with the 10BD. So in form 10B, you will see the word 10BD. They were asking us to link with 10BD. But what is not explicitly mentioned here, but which goes without saying, is we also have to link it to form ITR 7, obviously. Because form ITR 7 has a schedule for voluntary contributions, as we know. And you will see many of these lines, it has to correspond with what is mentioned in form ITR 7. Similarly, coming down, there is an ITR 7, another schedule AI, which is not voluntary contributions, other income. That we have to match with this. So all this is basically a copy of what is in ITR 7 with little extra detail. ITR 7 doesn't go down into this level of detail. ITR 7 does not say match this with 10BD. In fact, in some places, they'll ask for difference between electronic and non-electronic transactions, that is cash and non-cash transactions effectively. So all that is extra in 10B. But otherwise, basic format from ITR 7. Then this is up to income. From clause 31 onwards, we come to the application, expense or application. Again, here, if we go through it, we see it will match with ITR 7, but they're asking for some extra information, like, what are the payments made in excess of 50 lakhs to a single person. ITR 7 at max goes into above 50,000. They ask for receipt information, that who has given us donations above 50,000, etc. But it does not ask for payments in excess of 50 lakhs to a person. I-10B is asking for that. Then revenue capital bifurcation is there also in ITR 7. And then coming down to application, accumulation, disallowances. We're not going to go into subclause by subclause here, but overall, these clauses deal with application. Then coming down to section 115 BBI, again, these are cases where for whatever violation, the income is going to be taxed at 30%. This deals with anonymous donations, the next clause 34. Similarly, coming down to, you'll see these various provisions given under, the trust sections under 11 to 13, where it is violated, then what is the, the consequence of that? These sections deal with that. Capital asset. Coming down to here, you'll see accumulation. So this is the only thing which is, really different from anything else. Accumulation is unique to trusts, as we know. It is also an area which the department looks at very closely in terms of tracking the accumulation. So when I come to the practical section, I will just share with you briefly the approach that we use to track the accumulation, so that nothing which was accumulated in a previous year gets left out without being applied now, or nothing which is accumulated now is again, not carried forward in the right way. Of coming down further, this is again they're asking for details of application resulting in payment or credit in excess of 50 lakh during the previous year to a single person out of 37. So you'll see in clause 31 and 37, it looks like the same, but 37 is dealing with the, out of accumulation, what is done. 31 is dealing with the current year. As you know, they distinguish clearly between application out of current year income and application out of income which is carried forward from the previous year, which is accumulation. Again, these are all sections dealing with violations. Section 40 does about expenditure incurred for religious purpose in cases where they have ATG approval only. Then specified person. This is the only line which is actually familiar from the previous 10B. If you see till last year, the small, simple 10B that we were using, it had extensive clauses about specified person. So we can say that alone is carried forward from the previous regime. Again, here they talk about various transactions, like property lent to remuneration paid to specified person. They say it should be reasonable, but reasonable is not defined anywhere, neither here nor in the Act. So we have to decide from case to case what reasonable refers to. And when we come down further, this is all, as I said, this is all about the specified transactions, transactions with specified persons. Again, about violations. These last few clauses are important. Why I say important is because here we actually have to do some special audit procedures to make sure that these are satisfied. Like 269 SS, 269 ST, 269 T. these are all sections about loans being in excess of rupees 20,000 in cash. And the last one is again, whether the audit is required to deduct or collect tax as per the provisions of, so this is about TDS. For these two, we need a specific audit procedure. So with this in mind, this is just, I understand at the end of this, I'm not saying that we would know all the clauses exactly, but this has given us a broad overview of what are the areas which are being covered under this 10B. So we will ask our team to just quickly share the utility so we can see this is what the form prescribes. How is this being asked for in the utility? I am going to stop my screen share and I request one of our team members to share their screen, please. Sorry, are you able to?
Yeah, yes,
Rosalind, can
yes.
you share your screen?
Yes, Rosalind is sharing. Can you see the sharing?
Not yet, just 1 second.
See, Radha can confirm. See, Radha, could you kindly confirm we are
No,
sharing?
No, sir, not yet.
One moment.
You can still see my screen.
Can you unshare it? Can you stop sharing?
Yeah, I'm just trying to find that. I'm sorry, just 1 minute.
On the top there, red. On the top, there is stop sharing.
Yeah, now it's appeared. Yeah, sorry, it was. Yeah, I think now you can see her screen.
Yeah.
And can you, starting with audit report under section 1023C and 12A, can you see?
Yes, sir.
Okay. Yeah, Preeti would like to go ahead. Rosalind will.
Yeah, sure. So the first report from an accountant is what my father discussed. This is the first section. There's really nothing much which is different here, except those small words, profit and loss, IND, etc. So this is the first section. You can come out of this. And the basic details and legal nature again is what we saw there, the basic previous year assessment year, registered address, etc. Legal nature. Yeah, this is also fine. So 1 second, we can, yeah. So again, registration details and management is just tables to be filled. Yeah, you can exit this also. Let's just look at this screen for a minute before we click and go inside. Let's just look at the first screen for a minute. Rosalind, can you go back? Yeah, this screen. So if you see those clauses which we discussed there, the first few clauses we spoke about, which was, it is nothing but they've divided it into sections. So in our approach, of filling it, we can also do the same. So clause 1 to 8 comes under this first section, basic details and nature of the amount. No, we can stay here. We did not go in. So as you can see down itself, they're given the serial number, which clauses this section pertains to. So going down, if we click on, we will look at just 1 or 2 of this in detail. We're not going to go into everything in detail. So if you keep coming down, scroll down further. Yeah, you can see up to here, details of specified violation. If you can see that line on top, before the schedules, the last one, details of specified violation here. So there it ends with 49. You see, so the clauses here are divided into these sections. What is below here, the schedules, are in fact, when you fill out these clauses, if you give yes somewhere, for example, for corpus, if you give yes, then this schedule gets activated. But before that, if you click on the schedule, it says you go and fill the panel first. So only when we have those respective, details to be filled, these schedules can be filled. Okay, we can go further up now, Rosalind. So at this point, I would like to just present to you an approach which we are testing. As I said, which everything is in the nascent stage now. So I'm just going to share my screen once again. Can I do that, Rosalind? You can.
I have stopped, sir.
Yes. So is my screen visible again now?
Yes, it's visible.
Okay. So what we are doing is there's a lot of information to be given, 49 clauses, and if you see it inside each of that, there are many sub clauses. So there is a tremendous amount of information to be given. So we have started this process of splitting it in 4. We are looking at what are the clauses where we can get a declaration from the client. Rather, that is the only way we can do it, by getting a declaration from them. Next, we are having a list of a checklist to be filled by the client to say yes or no. For example, did you modify the objects during the year? Yes or no. It doesn't mean we stop with that. If just because they say no, it doesn't mean we stop. Of course, we will look at supporting documentation, but that's a starting point, for us to ask them, okay, are these things done? The next is some basic documents which we collect and keep ready. All this may be things which we are already doing, but we are trying here to, to put this into a specific process, the 3 steps, 4 steps, so that with the short time that is available, we barely have a month left, unless I don't know if date gets extended, but let's look at practically 1 month, how to quickly accelerate and finish it in this time. We are having a package like, get these documents from the client, get an MRL declaration, get a checklist, and then of course our audit process. The audit process is things which we have been doing through the course of the year, because we do interim audits, etc. for client. But right now, again, we have to consolidate all those processes and put it in one place. So we are classifying the clauses into all these 4 categories. Which are the clauses where we can just get a checklist? Which are the clauses where we can manage with a declaration? Which are the clauses which we can quickly check with the documents which we are getting from the client? And which are the clauses where we have to do our audit process? So based on this, we have just a few templates, which again, I'm just going to share with you very briefly. So if you look at formats, so in the, the checklist and format, along with the checklist, we're also getting some formats to be obtained from the client. Sorry, 1 second. I think, can you see my Google Sheet now, or is it still the PowerPoint?
Still PowerPoint.
PowerPoint. Okay, let me just share my Google Sheet then. Yes, now I think you can see my Google Sheet.
Yes, ma'am.
So in the interest of time, of course, for all 49 clauses, we cannot go into each format, etc., what needs to be done. But I'm just going to share it for one, which is, I know, a major issue now for many people, which is Rule 17AA. So for this, the approach we are taking is, we can, of course, get the client to give us all the information, but our responsibility as auditors is to be able to verify this information. So we have to link it to the books of accounts and ideally to the audit process, so that we are able to say yes for this clause. In the utility, if you see, it is very simple. It just says one word, yes. Has the client maintained? Not maintained, yes. But to say that yes, we have to do all this, background work, get the supporting documentation, which is what we would like to just show you here. So for Rule 17A, what does Rule 17A actually say? If you look at the provision, it asks whether the client has maintained the books of accounts in the prescribed format with respect to certain things. For example, details of the books of accounts maintained. So here, if you see in the rule, we have to look at the 10B like this. Look at the utility. Then from the utility, you also have to go back and look at the Rule 17AA. Why? Because the utility, for that matter, even if you see the notified form, the form itself, it does not talk about all that the rule mentions. If you go and read Rule 17AA, that says clearly that, these books should be mentioned in, this information should be mentioned, these details should be available. So if we have to say yes in the utility, we cannot stop with seeing the utility. We have to see the utility, go and see the notified form 10B, and then from there also go and read the Rule 17AA. By going through these 3 documents, we have put together this table, which we are just starting now. So to take a large NPO, they have multiple units. So for each unit, we have to go down. So cash book, is it maintained? Yes. Is it in a computer system, which, in almost 99.99% of the cases, it should be yes. Whether maintained at registered office. Again, this is an issue which we just discussed now. Most often for the units, it will not be in the registered office. It will be in the respective place, whether submitted for audit. So like this, we have to go down to each step either get the client to fill it if the client is capable, and then we verify it, or depending on the client's level of competence, we may have to fill it and verify it ourselves. Then this is the general information. So if Rule 17A, if you look at the 10B utility, it asks about these specific books: cash book, ledger, journal, bills, receipts, any other books. Then it also mentions specifically these areas. It talks about records of all projects and institutions run by the SSC. So for that is a separate format. Up to actually 6, we have a general format. 7 and 8, this talks about business, 11.4, 11.4A. 11.4, actually, most of our clients don't have. 11.4A also, we have a separate procedure to deal with that. So that is why these 2 clauses we have not listed. Then if you look at the other clauses of 17A, it talks about projects and institutions. So a separate format for that. You can ask, now we have taken a format and added some columns. Why are we adding these columns? For our audit purpose, so that we can verify it in that specific client's case. What is the name of the unit? What is the address? What is the object? What is the activity which is being carried out? Who is the unit in charge? Who is the administrator? Because for instance, if you take a large body and they're running a hospital, one person will be in charge of the unit, the accountant or whoever is dealing with us, but the head of the unit who is legally responsible is a different person. Then there are other clauses which talk about, if any other law is violated, etc. So that is why we have added these 2 columns here about which is the authority which is approved. If it's an educational institution, then are they affiliated with UGC? What are the courses that they are conducting? Are those courses approved? So as I mentioned, it is difficult to look at any one clause in 10B in isolation. We have to look at the form holistically. We have to create templates that satisfy more than one clause at a time. That is why our templates are a little detailed like this, where we have added others also. So this is for the projects institutions. Going back to 17A, it talks about the books of accounts we have finished, projects and institutions. Corpus, have they received corpus? I'm not going into each of these formats, but I'll just show a few. The other one is properties. Immovable, movable properties. So here you see, they're asking, what is the form? I'll tell you what the form is asking for: cost of acquisition, nature of the property. But we are adding these others. For instance, we need to know the unit name. If we have to verify it with the financial statements, we should know in which unit is this property appearing. So unit name. What is the head in the fixed assets schedule? So that comes here. What is the WDV? Though the form is not asking for WDV, we are not reporting the assets at cost in the books of accounts. As general accounting practice, even for NPOs, we show WDV only. So we link it to the financial statements and the books of accounts. We have these other columns. And then, of course, they are asking for the address of the property. The form wants the address of the property. Then the form, utility, or the notified form, it does not talk about income, but Rule 17A clearly talks about what is the income derived from such property. So we have to show that also here. If it is a building which is being rented out, we have to fill the rent here, whether registered document available or not. And then it also asks for sale consideration, whether invested in new asset. So we have added those also as columns here. So if you see every clause here, to satisfy that clause, we have to design a format. That is what I'm trying to explain right, in this case. For a few clauses, how we have gone about the process. We have not, at least for the major 10B cases, we have not actually finished this process for the major clients. It is all in various stages, but it's getting filled. Many clients are filling it. So these templates are working out. And couple of others which I would also like to show is we covered projects, institutions, immobile, movable properties. Record of specified persons. Again, this is, it has been there. The requirement has been there for a long time, but now 17A says the organization should maintain a record. So it's not enough that they just give us a list or that we know the list, but they have to have a record. So this is the format in which we recommend that they have a record of the specified persons. What is their name, address, permanent account number, Aadhaar, etc. So from this year onwards, this will become part of their books of accounts regularly. Ideally, it should have been all these years. It should have been, because the rule. We know that all this information was required by the Act, that transactions with specified persons have to be reported, etc. But right now, it is specifically asked by the 10B, so we don't have any option but to present it. Like I said, there's a lot more which we can explain, a lot more which we can show, but in the interest of time, I think we will like to stop here. And we welcome any questions. And once again, we thank you for the opportunity.
Thank you, madam. Members,
madam.
do you have any questions? So we can ask questions from us.
Radha, Radha,
Yeah,
ma'am.
yes, yes, sir.
I just want to thank you for sharing the queries already asked by some of the members.
Yes, sir.
I have noted them.
Okay.
I just also saw a few queries just come in the chat in the last couple of minutes.
Okay, sir.
So do you think it is a good time to respond to them quickly, one after another?
Yes, sir.
So let me take
Okay.
the queries that you already shared with me earlier in the day.
Okay, sir.
You have shared with me. I have the Excel.
1 second, sir. 1 second. Let me just ask my members also if they have any questions related to FCRA, because we are not touched FCRA. So if they have any questions, that also they can include in the chat box, or they can ask directly.
Yeah, that is a good idea. What I thought to in the interest of saving the time, I will start the ones that you already shared with me earlier in the day. There are quite a few. And then the ones that have come in the chat also, I will take it up immediately after those queries in the Excel, what you shared with me.
Okay, sir. I think a few more questions are added in the Google form. That also I will share, sir.
Yeah, please, kindly do so. Kindly do so. So would you like to share and ask, or you want me to share what has come to me? Feel free.
It's okay, sir. You can start, sir. You can.
What has come to me, I will share right away and respond to those queries. Huh?
Okay, sir. Meanwhile, I will add a few more questions.
Yeah. Preeti, thank you so much for the last part, and please feel free to add on or complement the response that I'll be sharing. And if any other staff, Rosaline, you want to add on something, feel free. Okay. So shall we take up the ones we Excel?
Yes, sir.
Okay, I am sharing. Are we sharing? Preeti, ma'am?
So you can share the question.
I will share. Just a second. I will share so that you know that these are the questions.
Okay, sir.
Am I sharing?
Yeah.
Correct? Am I sharing?
Okay. Yes, sir. Sir.
Okay. If you don't mind, would you kindly read the questions for me? Then I will give the answers.
Okay, sir. The corpus donation can be separately invested in 11/5 every year. If we want to use corpus fund for revenue expenditure, what is the process?
Okay. Yes, corpus donation. As I shared with you during my presentation, it has gone through paradigm shift. I told you that 222, 224, 2A, before it's coming into the Act, corpus was not at all an income. It is like a mutuality concept, corpus was not at all an income. But 224, 2A brought it as an income, but then 11(1)D allowed it as an application. But later on, now the latest position is the corpus is income, but when it is not invested under section 11(5) mode, it will not be entitled for exemption. So what happens? Some of the entities are using the corpus for revenue expenditure because for survival, not just that they want to use corpus because they don't have other resources, they are using the corpus. But sometimes even when they have other resources, it is possible that they can use the corpus for revenue expenditure. So in the year in which they received the corpus, if they have already used the corpus for revenue, then it will not be entitled for exemption under section 11(1)(d) at all. However, after 1 year or 2 years, if they are able to replenish the corpus, that is equal to the amount utilized for revenue expenditure, and they put back in the 11(5) mode, definitely they are entitled for exemption in that year, subject to two conditions. Condition number 1, the corpus should have been received after 1/4/21. Corpus received before 1/4/21, even if exemption was not claimed, even if the money is put back, there is no possibility of claiming the exemption. Condition number 2, that if they receive corpus, for example, they are 22, 23, and they could not invest it, they have spent it, they have to replenish it within 5 years. If it goes to 6th year, then it will not be eligible for exemption. This is the answer to question, this question number 1. Can we go to question number 2?
Yep. Whether transferring amount to the bank account, bank savings or current account is enough, or fixed deposit to be made and for fulfilling 11(5) conditions. Whether 15% surplus set aside amounts is also to be invested as per section 11(5).
Yeah. See, very important, good question. It's an interesting question. Many think only it has to be in FD, and some also think that only the accumulated has to be under 11(5) and not anything else. The real answer is the section 11(5) subclass 2 says deposit in any account. It does not say savings deposit, current account deposit, or fixed deposit. So deposit in any bank account, scheduled bank, etc., as mentioned there is sufficient. But for clarity's sake, for convincing the department, we always make a fixed deposit if it is an accumulated surplus. Again, as you may know, for the 1 year accumulation, there is no specific requirement to make any deposit or fixed deposit. However, for the 5 year accumulation, the specific deposit is necessary. Therefore, it is strongly recommended that for 5 year accumulation, the 11(5) mode FD is recommended. Though deposit can be is allowed, FD is recommended, because now they are also asking how you are keeping the money while we are filing the form number 10. The second question, the second part of the question is also important. If you go to 11(5), it doesn't speak about all funds. It only speaks about accumulated surplus under section 11(2). But when you go to 13(1)(d), that says any income, any fund of the institution, 13(1)(d). So you have to read 11(5) and 13(1)(d) together. And the violation is determined by the income tax department, not isolated 11(5), linking with 13(1)(d). Therefore, all monies of a trust has to be in 11(5). And as far as specific deposit is concerned, for section 11(2) accumulation, FD is strongly recommended for avoiding unnecessary trouble or argument. Because nowadays the concept is document speaks better, not the argument. So a FD document will speak best when it comes to 11(2) accumulation for 5 years. I hope the answer is clear. So can we go to the third one?
Yes, sir. Okay. The second and third provisions to section 12A subsection 2 provided the benefit of exemption under section 11 and 12 for the trust already registered at 12A for the prior assessment years, and the AO was not allowed to take any action under section 147 for any previous assessment year, only because the non-registration of such trust or registration. Now, with effect from 1/4/2023, second and third provision to subsection 2 of section 12A are omitted. In our case, the SSC trust got registration under 12AA with effect from the assessment year 18-19 and filling of the returns from assessment year 18-19. Recently, notice under section 147 was issued for the assessment year 16-17 for cash deposits in excess of 50 lakhs in the bank account of the SSC, which represents Hundial correction. Please enlighten us in the consequences of non-registration in the light of the omission of the second and third clauses to section 12A subsection 2 in our case for the assessment year 16-17.
Yeah, very interesting, very important question. This can come from many entities. As I was sharing with you when I made the presentation, that there is a withdrawal of this facility that was available under 12 capital A subsection 2, which is a great blow, big blow to many genuine entities who may not have been able to obtain the 12A. But here is a case, very good case, because this is not a case which has not at all availed the 12A. This is a case which has availed the 12A with effect from assessment year 2018-19, and also filing the returns, complying the laws applicable. However, due to the withdrawal of this 12A subsection 2 from 23-24, unfortunately, the earlier year is now under attack. That is assessment year 2016-17. Unfortunately, because the 1/4/2023 has withdrawn this proviso, and it is not given any facility that if you have already obtained the registration for an earlier year, you would be covered for all the earlier years. There is no such prescription here. So I am of the opinion that 2016-17 will be treated without 12-year registration, which means it has to go through the regular process of non-filing of the return, and it will come under 1310, etc. However, I would like to just make a case. That is, as of the date of obtaining the 12-year registration by this entity, which is applicable to the assessment year 2018-19, relevant to the previous year 17-18, the 12A2 was in force. 12A2 was withdrawn only subsequently. So by virtue of 12A2, which was in full force during the year, or at a time when the assessee trust obtained the registration, I think in all genuineness, because genuineness is proved here, that assessee wanted to comply. There was no what is called willful neglect or default on the part of this assessee. If it was willful neglect or default, then it would not have applied for 12A at all, even for the assessment year 2018-19. So I think I feel there is a case that can be made out that 12A2 should be made applicable to this assessee. This is my reply. But as you know, because the withdrawal has only happened recently, there is no judicial support. Sometime soon we may get to judicial support, and I believe this is a good case for a judicial support, because it has demonstrated its commitment for compliance. It has made its application. It has got its 12A. It has filed its return, and at that point of time, 12A subsection 2 was in force, was not withdrawn. This is my responses here, Radha, to this query.
Okay, sir. Thank you. Next question is, Form 10BD is required to be filed for donations received by the trust. In case of Annadanam Trust, most of the people will donate small amounts like 50, 100 and 200, etc. After taking meals, they will not provide PAN or Aadhaar or any other identification number. Since their identification details are not available with the institutions, Form 10BD could not be filed for those small donations. However, those donations contribute about 50% of the donations. Please enlighten us on the consequences under section 115BBC for non-filing of Form 10BD for the above donations, and is there any remedy available?
Okay. May I please confirm this is a religious trust or a charitable trust? If you don't mind, say, Radha, do you be able to confirm from the queries?
Seems like religious trust.
Religious trust.
seems like.
No, if it is Annadanam
So it's a
and
charitable trust.
it is a charitable trust. Am I
Charitable
right?
trust.
Okay.
Because if it's a religious trust, there is no question at all. Exemption is available for religious trust from the 115 BBC. It will not be considered as it will not be hit by 100 BBC at all, anonymous.
Okay.
If it is a charitable trust, yes, this is a good question. This is a good question. If I look at it from a strict application of the law, there is both violation of 10 BD as well as 115 BBC. However, if you look at it from another angle, a very genuine case where people after they get their food after the Annadanam, they just donate 50 rupee, 100 rupee, 200 rupee. The very fact it is such a small amounts, it shows that it's a genuine trust. Firstly, secondly, I don't think any of these people will be interested in claiming the benefit under Section 80G. Though it is below 2,000 rupees cash, below 2,000 rupees cash is eligible, about 2,000 only is not eligible for ATG. I'm not sure these kind of people will be ever interested or, will be in a position to claim ATG at all. So, 10 BD should not be a violation. 10 BD should not be a violation. And 115 BBC cannot be a violation, or we can argue that if there is a list of these people kept, for example, during the pandemic times, we had so many people fed, poor people fed, and they were making small little contributions. But the advantage is we had a list of those people. They all were listed, and some people even signed, some people even put their their kind of attestation. They put their finger and then they made an attestation. So we had a kind of an identity of those people. What I would like to argue here, instead of giving a negative reply, a genuine case where we had set up poor people or even rich people middle class, who wanted to have this Annadanam and they contributed these rupees. There is an identity. If there is an identity, I believe both 10 BD and 115 BBC should not affect them. But if there is a total lack of identity, and if it is a question during the assessment, we can be in problem. So I am not sure now at this point of time to recommend a set of identity system, because of the passage of time. If identity is possible by some method or the other in the course of this kind of program, I think we are in a safer side. If not, we may have to defend ourselves in the course of the assessment proceedings. It has happened many times in the past, Radha. This kind of a situation has happened, and I have come across during assessment proceedings also. This was questioned, and we have cases where we defended positively, strongly, and because of the genuineness and because of some kind of identity available, it was accepted. But there are also similar cases where there was completely lack of identity and it could not be accepted, and the amount is also large. In this case, when you say 50% of the total donations, the percentage is important, but the quantity also matters. For example, if it is crores, someone can suspect, is it a good money or not? But if it is lakhs, like out of, I'm just saying 10 lakhs, the 5 lakhs is this, I don't think it should be a major problem.
Okay.
Okay?
Okay, sir.
Yeah. I can't give more direct answer than this, given the reality of the question, reality of the operation of this trust. Can we go to another one?
Yes, sir.
Please.
As per the recent amendment, form number 10, statement of accumulation of income needs to be filed at least 2 months before the due date of filing of return of income.
Yes.
As per circular number 6/2023, CBT has clarified that accumulation shall not be denied to a trust as long as the statement of accumulation or deemed application is furnished on or before the due date of furnishing the return of income under section 139(1). Please clarify whether CPC will consider the above circular while processing ITR 7, assuming that Form 10 was filed along with the return of income, or do we need to make a representation to the assessing office or CIT for consideration of this Form number 10?
Yeah, as the circular has come, and the circular is also within the powers conferred under Section 119 of the Income Tax Act to the CBDT. By all means, the CPC should consider the circular and should not expect another representation to the assessing officer or to the Commissioner of Income Tax. In that case, the circular becomes meaningless. It becomes not so useful. And therefore, I am of the opinion that there is no need to make any separate representation to the assessing officer or the Commissioner of Income Tax. However, we all know that, many times the CPC has made issues or brought up issues which are already covered by circular or covered by notification or covered by even the provisions of the law sometimes and the rules sometimes. No guarantee, therefore, that it will be automatically considered. But definitely when it is not considered, we can take it up through the CPC itself that it is a clear circular and we cannot be penalized for CPC not taking note of the circular. This is my very clear thought process. Shall we go to another one? See, Radha, shall we go to another one? See, Radha, am I audible? I think you are muted. See, Radha, can we go to another one?
1 second, sir.
See, Radha. Am I audible?
Yeah, sir. Next question, sir.
Okay, please go ahead.
So, hundi collections of an organization registered under Section 12A includes foreign currency dropped by devotees in hundi. Whether this is related to foreign contributions received as per clause H and H of 1 of Section 2 of FCRA 2010. And the second question is whether is it related to anonymous donation. Treatment of anonymous donations received to the credit of bank account without any details of the remitter. Non-compliance of tedious process and various expenses of both revenue and capital expenditure. So this question has many sub questions.
Okay, let me answer one by one.
Okay, sir.
One by one. First is the foreign currency dropped by a devotee in a hundi, whether
Yes,
it is treated as a foreign contribution received as per FCRA section 21H. Yes, see, foreign contribution can be received only through bank remittance, Radha, bank remittance, not through foreign currency. However, here the assessee cannot be blamed for receiving because it is dropped by the devotee, isn't it? Now, strictly speaking, having received the foreign currency, it becomes a foreign contribution. It becomes a foreign contribution and it has to be reported to the FCRA. Now the question is, does this body has FCRA registration? If it has got FCRA registration, then it is possible, it is easier. If it is not having FCRA registration, then it will be a question. And therefore it has to be treated in a practical manner. For example, the entity can encash it through the official channel and then put it along with the donation, and it will go part of the donation. Coming to the next question, whether it is treated as anonymous donation, yes, because there is no identity, it is through a cookie system. It will be an anonymous donation. Now, if it is an anonymous donation, if it is a religious body, there is no problem. But if it is a charitable body, it will be subjected to 115 BBC provisions. Then treatment of anonymous donation received through the client of bank accounts without any details of the remitter. Yes, this also we are coming across, particularly when we have payment gateways, and the payment gateways also not able to help us.
Excuse me, sir. Excuse me. Sir, I request other members to please keep your audio on mute.
T.H. Subbarao, please mute yourself, sir.
Can you kindly mute if you don't mind, because we are already 17 past the time.
Thank you, sir. Thank you.
Shall I go on?
Yes, sir. Please go.
Okay. See, this is a very practical case, a realistic case. This is not a case where somebody wants to, do big underhand dealing or anything. This is a very practical case. A devotees can drop foreign currency, but we have to be practical. My recommendation is, if the organization has got a FCRA registration, it can report through that. Of course, the name and address won't be there. It has to be mentioned. It is anonymous there. And if it is no FCRA, I already explained to you that to use the normal banking channel, encash it and add it part of the donation. And as we auditors, we can put a note. We can put a note in the notes to the accounts. And if it is FCRA, then the CS certificate we are issuing. The CS certificate, we can put a note explaining the practical case. And as far as anonymous donation treatment is concerned, in the Income Tax Act, 115 BBC will apply if it is a charitable. If it is a not charitable religious, then BBC will not apply as it is exempting. And non-compliance of TDS on various expenses, both revenue and capital, under the Income Tax Act, it is very clear now that it will be not allowed as application. The expenditure which has happened without the TDS will not be allowed as an expenditure, as it is very clearly there everywhere. And therefore, the disallowance will have to be made even in the computation of income. There is no question on that. Okay? Sierra, have we covered all the sub-questions?
Not all, sir. A few more questions are there, like non-compliance of TDS provisions on various expenses on both revenue and capital expenditure.
I have explained that just now, no? Non-compliance of what
any of the
1A will be applicable, and therefore the expenditure will not be allowed as an application of income. Both in regime 1 and regime 2, it will not be allowed as an application of income, and it will be subjected to disallowance and tax at 30%.
Okay, sir. Okay.
Yeah. On the question number 1, disallowance in computation and arriving at accumulation, everywhere it will be applicable.
Okay, sir.
It will not be allowed as an application at all.
Okay, sir.
Yeah.
Okay, next, investment in mutual funds.
Yeah. Section 11.5 does not prohibit mutual fund. However, FCRA prohibits. FCRA, if it is an FCRA investment, it is prohibiting. Mutual fund is not a acceptable investment, prohibited. But income tax does not prohibit a mutual fund as of now.
Okay.
Any other? Any other?
Yes, sir.
I see
One case study is given, sir.
parameters for a non-profit organization with expenditure. Shall I answer that one?
Yes, sir.
See, general donation is 4.5 crores. That is 4.5 crores. Credit in the IND. Corpus is 60 lakhs, 0.6 crores, which is 60 lakhs, right? Then it's not sure.
Expenditure incurred 4 crores.
Expenditure is 4 crores, no?
Yes, sir.
Expenditure is 4 crores towards the objects of the NPO. Applicable annual report in form number 10B, audit report in form number 10B. Is it correct? Absolutely correct, because though the general donation is for voluntary contribution or donation is 4.5 crores, corpus also is an income under section 224(2)(a). No, it is not exempt automatically. See, exemption is after it is considered as income. Therefore, the 5 crore cap is more. It is 5.1 crore. Therefore, audit report in form number 10B is the correct form. There is no doubt on that. Can carry forward figure and applicability form 10. Carry forward and applicability of form 10. See, carry forward is no more allowed. No more allowed anymore. It is completely now not allowed. And investments to be made under section 11.5. For what is that? I'm not sure. Investment for 11.5 is for what? Is to be made for what? It is not clear. Investment has to be under 11.5. As I already answered earlier, all the funds of the trust has to be under section 11.5. There is no question at all. Okay. So I think now it is already going to be 7:30. If there are any more important questions, 1 or 2 questions. After that, perhaps I am also about to go for another appointment. So is this okay?
Yeah, there are few more questions only, sir. Two questions.
Okay.
2 plus 10. Okay. Can form number 9A and 10 to be filed along with the audit report for the financial year 22-23?
What do you mean?
Form number 9A and 10. Both can be filed along with the audit report. Yes.
Can be filed. Both can be filed. Both can be filed. There is no bar.
Okay, sir.
You mean to say a part of the funds under 9A to be utilized in the next year and remaining funds in the next 5 years?
Yeah.
Absolutely no problem. Can go. Okay.
Okay, sir. Okay, sir.
Any other?
Yeah, one more. Income tax refund on account of TDS on FDRs out of local funds can be received in FC utilization account, sir?
The refund, isn't it?
Yeah, income tax refund.
Not really, because our experience is the bank does not allow, the FCRA designated or other FCRA or the utilization account does not allow for a non-foreign money unless we prove it is a foreign contribution. It has been returning back. So we are not able to receive in the FCRA account the refund, even the refund relating to the FCRA money FD interest. Therefore, we have been receiving only in the local account, and we have been putting a note in the FCRA account that only one bank can be designated or notified to the income tax. Therefore, we are notifying the local account, and the refund for the FD interest deduction TDS is received there. That is what is happening. Okay.
Okay, sir.
Can we go to another one?
Yes, sir. Whether accept, okay. Denial of exemption for belated ITR applies to resume one entities also.
Of course. If you go to Proviso 20, it covers 1023C Proviso 20. It covers the delay of the return of income. Similarly, 12A BA also covers the delay of the return of income. In both the cases, it is a violation. There's no question. Okay.
Okay, sir. Another
Any
question.
other?
Yeah. Can one branch of an organization give donations to another branch of the same trust?
Absolutely no question.
Okay.
Absolutely no question, because it is within the same PAN, same entity. There is
So no
absolutely
problem.
no question. Okay.
Okay, okay, sir. Okay. What is the tax rate for trust having 12-year registration and made disallowance under section 40A3 and 40A1A?
Both are violations. One is a cash exceeding 10,000. The other is a non-deduction of
Non-deduction
TDS.
tax.
So both are violations, and they will be subjected to tax at 30%.
Okay, sir.
Yeah.
Okay. Next,
Any other?
last question, sir.
Yeah.
In form number 10BB, para
Yeah.
27 subquery 1 regarding the application of funds, does it mean that report of all accumulated funds set apart under section 11(2) with 5 years time limit? Time limit to apply.
One moment, I am taking the 10BB. Para 27?
27 subquery 1.
Subquery 1. One moment, let me take that. Give me a second.
Yes, sir.
Give me a second. 10BB. 10BB. Para 27. Subquery 1.
1. Yeah.
BB, para 27, subquery 1. Form LBE. One second, I'm taking. We are all with so far with 10B, so I'm just taking 10BB, 27, subquery 1. Subquery 1. 27 is application of income out of the following sources during the previous year. Isn't it, say Radha?
I don't have that form ready with me, sir.
Income accumulated under the third proviso to section 1023C or under subsection 11(2) of any earlier previous year. Yes, it relates to the earlier previous year, not the previous year relevant to this assessment year.
Okay.
Okay, for example, if the entity has accumulated in assessment year 2021 or 21-22 or 23-22-23, that is last assessment year, then it is referring to that amount.
Okay, sir.
It is clearly says income accumulated under third proviso to 1023C or under subsection 11(2) during any earlier previous year, not the previous year relevant to this assessment year, earlier previous year, which means this is possible to get from the tracker. You know, if you have the tracker for the accumulation and utilization of the surplus, we can take it from the tracker or from the ITR 7 schedule. Which one? Schedule no, the
Schedule D or A.
DR, you take that schedule in ITR 7. See Radha, in ITR 7, now we have a specific schedule where we have to fill the each year accumulation and the utilization from the accumulation and the balance of the remaining surplus to be utilized. All that is there in schedule.
Schedule D.
D. Schedule D. See, Schedule D of ITR 7 will give the figure, exact figure to be filled up in 27, capital A and also capital B. Capital B is about 1 year accumulation. Capital A is about 5 year accumulation. And the capital C is about previous year's 15% accumulation. And D is the corpus, E is borrowed money, and F is any other. In other words, from which source you are making the application. That is the point. Okay.
Okay, sir.
Anything else?
No, sir, we have covered all the questions, sir.
All the questions are
All the
covered?
questions covered. Yes, sir.
Okay, okay. May I please take 1 minute from my side?
Yes, sir.
Okay, I just want to say, first of all, the members have gathered for evening of this time. According to me, it shows their great gesture and great dedication to the non-profit entities. As we are all dealing with both for-profit and non-profit, we know that non-profit entities render a huge service, great service to the people of our country, particularly the poor and the needy. So I feel highly, I have a very, very, positive impression that so many of you from an area like Kakinada have joined this conversation. And I want to wish each and every one of you there, members, very best success in smooth filing of all the various forms, whether it is audit report or accumulation in 9A or 10 or ITR 7, etc., and have a wonderful experience. And also, see Radha and your team members there, the office bearers, I would like to sincerely thank you. You have been so determined to get this conversation going, and I feel your determination and your such a great effort is the reason for this conversation. I want to thank you for all your support for making me to join you all for this conversation. I also want to thank my daughter Preeti and also for all her preparation and such a very clear sharing of the situation, and also our staff here, Rosalind and Saldarya, and all those who are struggling. I must say that it is not a cakewalk for us, but we are determined to prepare all these returns and all these forms and file them well. And I also feel that if you have further queries, you may want to share, and we see how much we are able to respond to you. We try our best. So once again, wish you, see Radha and your office bearers, and also all the members there, very, very great success. And I'm happy to reach out. It's easy to have this kind of sessions in the city or in the bigger towns, but from such areas like you are all there, it is not always easy, but I'm so happy that we made it possible. All the best and hearty congratulations.
Thank you, sir.
very much.
Thank you, sir. Thank you very much. It was an excellent session, sir. We are very much delighted to have you, sir. But we want to have you actually in physically, but due to uncertain circumstances and all, we cannot have had physical meeting. But this virtual meeting also very helpful, sir. Very helpful to I think our members also got most of the questions solved. Thank you very much, sir. Thank you very much to your team also, sir, and your daughter. Thank you, sir. Sir, can you?
I must say one word. I would
Yes,
have
sir.
very much been delighted to make it physically because of two reasons. One is a family reason. My father, who is 98, is sick, and I'm not able to leave him and travel. And secondly, also another reason, it's a huge pressure time going on here. So both the reasons have prevented me, but definitely I will look forward to be there with you all physically sometime soon. Please excuse me for this time.
Thank you. Thank you, sir. Sir, can you please share the PowerPoint presentation and the formats if possible, so that
we will do that in a day.
We'll share with our members, sir.
Yeah, we will do that in a day or two. Okay.
Thank you, sir. Thank you, sir. Thank you.
May I log out?
Yes, sir. Thank you. Thank you,
Thanks
sir.
once again. Thank you so much. Thank you. Bye. Bye-bye.
Thank you, members.
Bye.